Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning. Welcome to this Friday edition of Benzinga's Pre-Market Prep. Spencer Israel, Joel Elconin, Dennis Dick with you this morning. Same story as every show this week. Earnings, obviously, right? Amazon, Twitter, energy companies reporting this morning. We got some Apple news. We'll cover, unlike yesterday, we'll try to actually cover, I'm serious this time, as many of them as we can, and try our best not to get sidetracked. Our guest today, Markus Heitkoetter, will be on at 8:35 from Rockwell Trading. Jason Raznick will be on at 9. Speaking of Markus, if you want more videos from Markus, you can always go to his YouTube channel. You can go to rockwelltrading.com/Benzinga, which actually does redirect straight to his YouTube channel. So the link is up on the screen there. That goes right to his YouTube channel. See more stuff from him. Guys, go ahead before I throw it to Joel. Smash that like button. Let's get to 1,000 likes today to end the week on a high note. Speaking of high notes, Joel, are we on a high note this morning in the S&Ps?
The opposite here, Spencer. Good morning to everyone here on this pre-Kentucky Derby day. Straight down. We haven't even seen that closing print from last night of 42.0350. That's your all-time closing high. 0150, that's your high. Traded as low as 75. A little bit of a trading range here. Tested the bottom of the trading range. So big day for the market. A lot of red on the screen. We'll discuss that with Dennis when he comes on. Crude, that's down $1.88. We got to talk about some big oil earnings today. $1.67 at 63.34. Gold trying to make its mind up here near 1,800. That's basically flat at 17.69. Silver clinging to 26. It's just down 6 cents at 26.02.5. And Bitcoin down a couple thousand yesterday, up 1,700 today. Tight little trading range here in the Bitcoin futures. We'll see how that's resolved over the weekend. That's up $1,725 at 54,735. Triple D, I guess we could call this kind of a funky Friday here. We just Amazon. It's all Amazon in the green. That's about it.
America got Amazoned. And you're like, what are you talking about? Amazon's trading up. This is just funky ETF effects lately, and this one was a weird one. And they keep changing the playbook here, but Amazon reports the numbers were excellent. Stock rallied substantially, but if you watch just even right off the hop, Amazon rallies 150 points, and the SPY would not go green. And I'm like, how are they not bringing up? And the Qs wouldn't hardly go green too. They tried a bit, and they went green for a bit, and then they just started rolling over. It's like, in the first minute, I was like, how are they not buying the SPY and the Qs? I'm like, oh, they're going to do one of two things. They're going to have to buy that, or they're going to start hammering the other stocks. And that's exactly what they did. They just started hammering the other stocks. Microsoft started getting hit. Google started getting hit. We have overnight news from Apple. And it's unbelievable the rotations that are happening within sectors here now sometimes too. So Amazon blows it away. Typically, you see a little sympathy move with the other stocks. None to be had. They do the exact opposite, and they hammer them down. And they just did not want the index to go green, which is very interesting.
Spencer, why don't you give us that Amazon report here, and I'll just give you my early observations and where we're at right now.
Yeah, I mean, they just completely blew it away. Hardly a surprise, I guess I should say. EPS for Amazon last quarter, $15.79. That's earnings per share versus a $9.54 estimate. Sales of $1.85 billion versus $1.45 billion estimate. So they beat that number as well. Q2 sales guidance also above estimates. Amazon Web Services growth up 32% year over year versus a 22% growth estimate. Online stores sales above the estimates. Prime streaming hours up 70% year over year. It was pretty much all good from Amazon.
Love the report. Love the company. I'm not chasing the stock. I own it. I own the stock in my long-term portfolio, so those shares will stay the long-term investment, but I'm not adding to it here. One, they said nothing about the split.
Correct.
Which it's surprisingly, the stock has held up fairly well. I mean, it was a great report. I thought if they didn't announce a split, the stock could actually go down because I thought it had about 200 points of Gasparino fluff in there because obviously Gasparino was saying that they might announce a split. Obviously the market wasn't, that concerned about that. They just looked at these numbers and said, wow, amazing company, amazing quarter. It's a stock I do love in my long-term portfolio. I still eventually think it's going to 5,000, but the concern for me with chasing Amazon today is Apple. Apple blew it away, $90 billion stock buyback. We were somewhat concerned in the pre-market that had given back half the gains. Well, it gave them all back. And now it's down more. We do have, a headline driving Apple down here this morning too out of Europe. But it's a concerning tape right now. And we've been talking about it for a couple of days here. Not the SPY because rotation has kept us higher, but just the fact that you're seeing a lot of the little growth momentum names starting to get hit again. And yesterday was a tough day for ARC. If you look, it was a tough day for a lot of those stocks that have been bouncing back. Fubo had a rough day. You can go just across the board. Space had a red candle. I mean, is that just a little pullback here and, the bottoms are in, or is there still a lot of pain ahead for some of these high value, high flying 2020 names? Still to be determined. So we're at the crossroads here. We need to catch a bit on some of those growth names right away. And we also need to catch a bit on Apple because if the sell-off continues there, that could start to spill over into other stuff too. It's an ugly morning here for the market.
Boy, you covered a lot there. First things first on the Amazon, that high, that was just a crazy high that you had there. And boy, that really looks like it's going to hold up. 36, 67, 66. They just bid it up and now it's coming down. What I think is really interesting about this chart is you had your all-time high at 52 and a quarter, 35, 52 and a quarter. And that's where you're settling in right now. So I'm just going to use that 35.50. If it can hold there, maybe rally up. I'm really very confident that you're not going to get anywhere near that pre-market high. Then I think if you lose this 35.50 here, there could be some more profit taking in it. But just a blast, holding in here. Kind of this is almost like the Apple chart from the
It's identical. I was just thinking the same thing, Joel. This is the Apple chart from yesterday morning.
Yep.
So if it follows Apple's script, it could be a rough day for Amazon in that way. So I'd be careful chasing it. Unbelievable if you look at the pre-market chart of Apple yesterday. It was the same thing. We had leaked back about half of the gains. The stock opened yesterday. They tried to rally it a little bit right off the hop, and then it just petered out. Yeah, it just petered straight down. And within an hour, it had given back all the gains.
Yeah, just one last thing in Apple, and I know you're probably sick of hearing me talking about it, but just like 135.50 area. I mean, that many tops, that many days. I mean, it traded up higher in the pre-market, but you still have to respect that many highs in the area. Now, maybe you regretted it when it traded 137 yesterday, but a lot of stock, that to me, that's institutions, that's big money selling in the same area several days in a row. So we'll see what happens. Chip shortages seem to get everybody here now, right? I mean, the chips are down, and
Ford got hit hard yesterday.
Yeah, very hard.
Kramer liked it last night on Fast Money or on Mad Money.
Wow.
I still say I like Ford, but it's a concerning tape right now. Like I said, I'd buy more if it went down here. It actually went straight down here. I did not anticipate it going down that hard. I rarely add to winners. I rarely add to losers. I'm usually in or out. I'm still in Ford. I do sell parts of the positions, but when I'm entering, I rarely, add to that. So I don't know. I kind of want to add to the Ford, but at the same time, I'm just spooked on this market. I'm continuing to be spooked. And I know rotation is still helping us out. And I know the SPY is basically at all-time highs. It just feels like it's the calm before the storm. I feel like there's so much stupid money out here just chasing ridiculous things. And a lot of that money got caught, obviously, in some of these, crazy names back from February. And some of these stocks have started coming back. But for the most part, a lot of them haven't. And I just, the money keeps rotating around. Inflation's, running rampant. I just tweeted out something about lumber prices from one of my friends, Jeff, there. I'd say what the tweet was if you wanted to show it, but I can just actually say it. But, we're going on a bad tangent here with obviously.
I just want to say one more thing,
inflation.
and then we could go to Twitter. I was talking to Sean Udall yesterday, and I was talking, I got, X amount in the market, and then I got an X amount in real estate, and I got an X amount in cash, and you know what? I hate all of them. I just, it's just
Is that not the truth?
I mean,
wow, spot on.
Yeah, I hate them all, and I don't, and, but it's like, if I pull my money out of the market, then what am I going to do with
inflation hedge?
Right, and if I take a lot of cash that I have and I put it into the market, then I feel like I'm buying high.
Yeah,
and the real estate is the real estate.
Well, the real estate's exploded too.
Yeah, I can hold on forever, but it's not as liquid. So it's just like it's a good feeling when you look at your portfolio, but I don't think I've ever been like this. Like, God dang, just give me 5%. Just like
but is 5% enough? Because and here's the tweet from Jeff. Would cost, this is from Canada, so it's Canadian costs. But would cost to build a deck using a 2,400 board. We're using 2,400 board feet and 200 square feet. In April of 2020, before COVID started, was $936. In April of 2021, it's $3,696. It is literally up almost four times as much money just on lumber. But we've been looking at corn, and we've been looking, I looked at a loaf of bread they had on CNBC the other day. A loaf of bread year over year is up 16%. Like, where in the hell are they getting this 2% number from? That's what I don't understand.
Oil, I don't know.
Where are they getting this number from? We got bread going up 16%. I mean, it's not all TVs going down. I mean, I don't understand where they're even extracting this data from, because it's so not realistic. I buy this, protein bars, and it's been $8.99 for like the last couple of years. I went in the store because I never go in stores anymore. Same store that I bought off for years. You know what that box of protein bars is now? No. $11.99. We're up $8.99 to $11.99. I mean, $9 to $12. That's a 30% increase in the price. It didn't go $9.99, skip $9.99, skip $10.99, and go straight to $11.99. Like, what world are we in here? How in the hell are they still preaching that, okay, what's transitory? Maybe it's temporary. That's their new word, because they can't deny it now. So now they just say, oh yeah, but it'll get better. We can still keep rates low. We can still keep printing money. So going back to your original point, Joel, is I hate it all too. I'm sitting with a lot of cash because I'm somewhat nervous about these inflated prices and everything. I looked and tried to buy another piece of real estate on 2 weeks ago, and stuff's going like $200,000 over ask. I mean, and the ask price is like up 50% from where it was 2 or 3 years ago. So, I mean, the real estate market's inflated. The stock market's inflated. Cash is trash because you're losing to inflation, but I'm scared to death to just go and throw it all in the stocks right now. So, but then I don't want to sell my stocks that I currently have because it's somewhat of an inflation hedge. At least I've got my asset prices rising. Same thing with real estate. I've got a couple of properties, and then I'm building the home, which I'm going to get absolutely hammered on that because I couldn't be building at a worse time, but I guess I have no choice. It's just an environment that is like scary across all asset classes right now. So it's weird, man.
All right, I'm bringing us back to the earnings. And actually, since we already we teased it, let's talk about Apple here for a second. Drink if you've heard this headline before. The EU is charging Apple with some antitrust stuff. They say Apple abused its position in the music streaming app space via their app store. And so that was that overnight there. And this is, of course, referring to the 30% cut that that Apple takes on everything, and the EU doesn't like it. So,
if they wanted to hurt the stock, what? Sorry, Mitch. What were you saying?
Spencer trying to get me drunk. PreMarket telling me to drink here because I'll drink to that one.
But if you wanted to hurt the stock price, and obviously I don't think they have intentions of that, you couldn't have timed this better. Because you have everybody caught from yesterday who bought Apple on the breakout, Apple on the good earnings. Oh, yeah, this thing is going to rock to 150, 160 because this is just an awesome report. They got the $90 billion buyback. It completely reverses that, has a key reversal, and then you get hammered with a headline on top of it. So now you have everybody caught from yesterday. Lots of bag holders. I'm one of those bag holders, but I've been a bag holder. Well, I don't know if I can call it a bag holder. I'm not a bag holder, but I'm one of those holders. That I've been in Apple for a decade. I'm not selling my Apple shares, but I tell you right now, I wouldn't want to have a trade on long Apple because I think you got a lot of people caught. So, 130 is key. Does it bounce there first time? Maybe. But there's some people caught from yesterday, big time. So, Jeremy Newsom, who is an excellent trader, and obviously we have him on the show a lot of times. He looks for, stuff where traders are caught. And I think if he was looking at the Apple chart right now, I think he'd be saying, yeah, we got some people caught from yesterday. So it actually looks like a good sell into rallies here. I know you're down and you're getting hit on the headline here. I'd be concerned if I was long Apple short term.
You had the event, right? You had the Apple event.
Yeah.
A week or so ago, and they pushed it into that. You had the earnings. They pushed it into that. I'm going to back off the 135 and a half level because that's history. Now, your focus has got to be 131. I've had this 50% retracement from the last earnings up here forever and a brother. It did get above there, and it did exceed it, got right into this area. And plus, you have 3 lows in this area. We haven't seen that yet in the pre-market. So if you think this is another turn up, another run for 140, 145, better hold 131 here, or else you're going to have some work to do to retrace. That was a pretty big move from 120 to 135 pretty quickly. So keep an eye on 131.
Okay, so we just had Facebook and Google tell us how hot the digital advertising market is.
Yeah.
So expectations for Twitter were pretty high, probably. I think that's a fair assumption to make. Yeah. And even though, like, on a bottom line standpoint, their earnings were fine for last quarter, somehow their first off, their user growth came in below estimate. And their revenue projection for Q2.
They can't get $1 billion. What's with this company?
Came in below estimate. So I was looking into that because I didn't listen to the call, but I was going through the transcript, and the very first question was basically that very point. Was like, hey guys, Google and Facebook just blew it away. Why didn't you? And what they said was, well, a lot of the brands that advertise on Twitter, were advertised around certain events that either got pushed to later in the quarter or into Q2, like award shows or whatever. Also, maybe they slowed down from the Capitol riot in January. So that's what they said. They said that delayed events and or the Capitol riot is the reason why advertising on Twitter wasn't as hot as it seems to have been on Google and Facebook in the first quarter.
You still on this, Joel?
Yeah, I do. And boy, oh boy. I mean, I don't like to sell, but I'm really getting sick of this one. I guess sometimes you get it right, sometimes you get it wrong. Spencer, I was talking about this thing on the Late Show yesterday. And the setup at $60 and just, you look at the revenue growth in that thing. First quarter it ever reported was a couple, like 200 million. Now they're at $1 billion. Look what Facebook's done. Look what Google's. I mean, it's just long term. They can't get it right. And, maybe some subscriptions or whatever. Yeah. But I tell you, when I look at this on my phone, I mean, how many ads do I see for stuff I don't even use? It's just, I don't know. Just the price action here, it's holding here at 56.73. I mean, someone's been bringing in some stock here, but man, oh man, between 55 and 60 is thin. So I'm not going to go out on a limb here and say the pre-market low is in by any stretch of imagination. Maybe hold out maybe for 55 here. You had 2 lows in that area, but like, I said I'm sick of my stocks. I'm sick of my real estate. Also, I got gold, so I'm sick of gold. I'm sick of Twitter. I'm sick of having this stock. I think my cost basis is like 17 or something.
Yeah,
but
you're in it for a
gotta
long
get
time.
the hell rid of it. I'm tired of it.
A couple thoughts. I mean, one, it has worked in the past to buy the dip on Twitter. So if you are doing that, I mean, it has worked in the past. My concerns, and the reason I might not be buying the dip, I think if it got down like that 45 to 50 area, that's where it had huge support before. I think I'd be more inclined as opposed to 56. I don't know if it's going that low. I don't think it's going that low today. But there is some concerns. One, Gene Munster was not giving it any love on Fast Money last night. And I listen to Gene in the long term, from the long term perspective, because Gene just gets it right. He's smart. He's not a fan. And what I think too is, isn't this the environment where Twitter should have really been kicking butt and taking names? Because how does it get better? It seems like the perfect environment for Twitter. Really, I mean, we went through, lots of things. People are sitting at home. Same thing with Pinterest. I mean, how is the environment?
That's another thing that I'm kicking myself for. How did I not after that Pinterest report?
Yeah.
How the hell did I stay in Twitter? I mean,
I just don't see this environment getting better for these companies. I mean, if we are, unless we get this second wave and the variations happen, we're all gonna be stuck in our homes forever. And I know in the U.S. it seems unfathomable because you guys are opening back up. But I mean, we're in a lockdown in Ontario. I do believe we are going to get past COVID. And if you do believe that, I just don't see the environment getting better for Pinterest and getting better for Snapchat and getting better for Twitter.
Dennis, you're acting like Twitter didn't just go from 27 to 80.
Exactly. So it had the huge pop, but I'm saying, what's the next driver to bring me back to 70 or 80? I don't care about the past performance. I make money on future performance. I wish I could make money on past performance, but I make money on future performance. So I'm trying to project where the next, where this next move is coming from a fundamental basis. What's the driver? I mean, if the overall market and inflation just keeps coming, rising tide lifts all ships. But it doesn't seem like the easy place to be anymore. It seems like the easy money, like to your point, Spencer, was made from this move from 20 to 80. And it feels like now we're in like this post-pandemic, some people going back to normal world, and we're not just going to be sitting on our cell phones and doing the mindless scroll anymore. So I just, I think the more real world opportunities maybe. So that's why I'm hesitant to just come in and buy the dip on Twitter today. I'll probably regret it because it seems like every time you buy the dip, you make money, but I don't know on this one. I'm hesitant too.
All right. What's going on? S&P, sorry, Spence. We're just creeping up a little bit here, about 10 points off the pre-market low.
I mean, what are your thoughts? I maybe you should show that tweet from last night, on overall market here before we get to Marcus here, because I just feel like we're replaying and people are giving me a lot of heat saying we're not in 1999, we're not in 2000. Market valuations are reasonable. They are on some stocks. I don't doubt that there's a lot of cheap stocks out there. There's still some stuff that's reasonably priced, but there's a lot of stuff that's just, still crazy prices. And there's a lot of stocks that are still pre-revenue that are still, I just wonder if we aren't, in for this next wave of selling in the growth names. And people don't want to hear that. They want to hear that their Palantir is going to come back to 40, and they want to hear that their Fubo is going to come back to 50, and they want to hear that their space stock is going to come back to 60. But I just wonder if we're just not, we're not in the early innings maybe. Well, I guess, some stocks are down 50, 60%. So they're already down substantially. But I mean, if we just look back at history, Ryan Dietrich always saying history doesn't repeat itself, but it often rhymes. It feels like we already had the bubble burst in February in a lot of these names. And now it's just like that slow little leak. You get these pops. And, here's what I was looking at on on Amazon. This is Amazon. Amazon obviously worked out. So maybe not the best example of it, but I just wanted to show that, Amazon peaked right around that just after 2000, when we started, peaked a little bit before the market. And when it bottomed 2 years later, the stock went from $110 to $5. So it went down 95%. This was the eventual winner. This was the one. But there is a plethora of stocks from 1999 to 2000. Anymore. Yeah, a lot of them didn't survive. And a lot of them, didn't come back. Microsoft took almost 17 years to come back. Cisco never came back to its pricing. Intel never got back to where it was 20 years later. Now, I'm not saying on the Amazons and the Microsofts and the Googles that some stocks are still trading reasonable prices here. So I'm not trying to say, oh yeah, Amazon's going to get killed. This is the better chip. But I'm just trying to say is everybody thinks back when the QQQs, we hear about the tech bubble crash. It wasn't a crash. It was a slow leak for 2 years. And this is the chart. This was the Qs back in, starting from the peak of, where the top is March of 2000. And 2 years later, it took 2 years for us to go down. Just that slow, steady leak. But if you look what I've been talking about is you had the little bubble burst where you had the big fall, 120 to 80 in the first month and a half. And then you had the people saying, oh, it's going to come back. The buy the dippers come in. It's going to come back, And it kept trying to grind higher for 4 or 5 months. We tried to grind higher. We got back to 100 on the Qs. And then reality set it, and the leak just continued and continued and continued until obviously we bottomed down 81% on the overall NASDAQ 2 years later. I think some of the growth names could follow this trajectory. I'm not calling the overall market here because some of the market is actually reasonably valued, but some of those names, and the ones I'm talking about, like the Zooms, the Pelotons, some of the stocks, obviously some of these SPACs, I think a lot of them could fall substantially still. So I think, we've had a nice rally in some of these names. And I still think, I've been saying that for the last few days, I think you use it to lighten up because I don't think we're going back to those highs. And if this market starts to get ugly, it's going to be these stocks that lead us down. So I could be wrong. And maybe we're in 1996 and maybe we're just getting started on this party. And maybe inflation's just going to drive up all prices. That's why I never go all in on anything. But I'm very underweighted those high valuation growth names now. And
you want to see a bad looking chart.
Yeah, give me one. I want to see a good looking chart too after, but so we don't have Debbie Downers. But
Tesla.
Well, this looks like Tesla. Like the Tesla chart's the same thing. You're right. It's a valuation that's very, very extreme. It's a stock that did not get back to the highs. It's a stock that tried to rally. It looks very similar to that QQQ chart from 2000. Yeah. Is it possible that Tesla could eventually be under 400 or under 300 or under 200? It could be. I mean, it was there last year. So if we do post-split adjusted, where Tesla was, if you take, the 5 for 1, and divide it by 5, I mean, Tesla came from $100 last year.
Yeah.
So I don't think it's going back there. But is it reasonable to think that this could re-challenge the March lows? I think so. I think it could take those out. But I don't know. It all depends on, a lot of other, factors, inflation, how much story gets hot again. But there's a lot of people caught in a lot of stocks. That's my point. There's a lot of people. If we have this bull market still going, and SPY is still at all-time highs. But there's this underlying other market right now where the growth names had a nice rally. Tesla, beautiful rally it had in March and April from those lows. It did not make a new high, though. And that's concerning.
Yeah, yep. Not even near. And it's moving lower off earnings. So what's the next catalyst? I mean, we don't talk about analyst ratings that much at all anymore. I mean, yeah, someone comes out and makes a big call, but it's, of course, we're in the earnings season here. But what's the catalyst? I mean, we're through earnings. You got another quarter. And the stuff that they said in there, about, we wish we had more Musk or whatever. I don't know. I mean, I got this is another one I'd like to sell too. I mean, how much more can you get out of these kind of things? And wow. I mean, is this another Head and Shoulders?
3,000, but
yeah,
she was right once. Is she going to be right again?
She might be.
Was she right or was she lucky? That's another thing to say too. Gil Morales was saying that on the show the other day. Absolutely, she's been an unbelievable performer in the last few years with the growth at any value strategy. I just don't know if that works long term.
Okay, so you've been looking at all these bad charts, and you're wondering, all right, well, let's look at some good charts. You can look at we looked at this, the industrial,
the
transports, which are on a massive
reasonable prices.
You can look at maybe even some financials.
Yeah,
I mean, we are at all-time highs for a reason.
Yeah.
The reason we're at all-time highs is because there's other stuff doing well. Don't think that just because Dennis and Joel are terrified of their growth stocks right now, it doesn't mean that we have to go down because we're obviously not.
Oh.
No, obviously we've been strong bucking.
And the rotation continues to keep us up. So I haven't sold like a lot of I didn't sell my new core. I didn't sell a lot of names that I feel are reasonably priced. I haven't sold one share of Amazon. I haven't sold one share of Apple. I haven't sold one share of Microsoft. I haven't sold one share of Google. I haven't sold one share of my Qs. I haven't sold one share of my SPYs. I haven't sold 80% of my portfolio.
Yeah.
But I don't have a lot of those little speculative names anymore. These, names that where Story was carrying and Story was carrying it, because you know what? Story carries stocks as long as the story stays hot. Once it starts to cool off, it's valuation that matters. And a lot of these just don't have that much, they just don't have the valuation to support.
You were
these
nervous
prices.
when I remember when you had that one time, this was on the way up. You're like, and I don't know, I think it was your swing portfolio, and you're like, I hate every stock I have in here.
Well, everything was up.
Yeah,
it's unreasonable that you have 99. It's unreasonable you own 100 stocks and 98 of them are up. It was just ridiculous. That doesn't happen. It's not the case anymore. And we are at all-time highs. So you're like, oh, maybe you're doing it wrong. You're in the wrong stocks. But, you could be, if you swung all the value names, you could still have a portfolio that's, doing well. If you're a momentum trader and you're always swinging to the momentum names, it's a good style that works. You just got to be able to cut those losers when if you're just holding on and hoping the stock comes back. I mean, if you've got stocks like SPCE that you're sitting on that you bought at 40 and you're like, well, I can't sell it at 20. I mean, this is a name that doesn't necessarily have to come back. I mean, a stock never has to do anything, but these are names that don't have valuation. I mean, it's pre-revenue. So it's a story stock, and the story is ice cold, just like space. The story is ice cold. So does it get hot again? It might, but that chart, think about the rally that we've had in the last, month in SPY, where we've been straight up. SPCE has been down in that same time period. Relative strength is terrible. It's a stock I loved. It's a stock that was great in 2000.
I want to get Marcus's thoughts on this. Markus Heitkoetter from Rockwell Trading. Marcus, good morning, sir. It's been a couple of weeks. How you doing? Oh, no, he's on mute. That's not good.
Corner.
You'll mute trick.
Uh-oh.
Let's check the interwebs, the mainframe, the wires. Did you turn it off and turn it back on? Try that. That typically works. Wait, okay. So
we love Marcus. We gotta get his voice.
We'll get Marcus on. We'll get Marcus on.
Here, we'll just keep him longer.
Not to worry. Marcus will be on here. But in the meantime,
okay, can you hear me now?
Yes.
Yeah.
Yeah. Hey, Marcus.
Okay, sorry, I just somehow I managed to unplug the mic. So right now I'm coming through the internal mic. Sound might not be so great. Sorry.
Not bad.
It's just so really heavy. It's only past 7:30. Anyhow. Yeah, hey, I appreciate you guys talking about ugly charts that you didn't bring up. Right. Right, SPCE, right there, right? What we need to do here is we need to see some revenue at some point. So this is, as you know, my Achilles heel. We can talk about it. But I was also just looking at my account because it's the end of the month, right? I mean, it's the last day of the month. It's options expiration. So I was just checking how I was doing this month. So thus far, I don't know, am I sharing my screen? Yes, I do. Okay. So thus far this month, I'm up 9,500 approximately. And I have, let's see, what do I have here? 1, 2, 3 options that are expiring today. So I wanted to go through these really quick. And then if you're not bored to death talking about right, I can certainly do this. Anyhow, so you said it. This week for me was a super boring week, and here's why. I mean, we're looking at the S&P 500, and this year is this week, right? I mean, I'm an option seller. I want to see premium, and what do you need for premium? Well, number one, you need volatility. However you spell volatility. Volatility, something like this. Spelling is not required for making money with trading. Fortunately, otherwise this would be horrible for me. And secondly, what I like to see is I like to see some down days, because if you're selling puts, and this is what I mainly do, I like to sell puts. If you're selling puts, their best on a down day. And this is what hasn't happened this week. I mean, on Monday, we just thought, okay, let's wait for the big event, the Fed meeting, right? So on Monday, nothing happening. On Tuesday, let's still wait for the Fed meeting. Yeah, Tesla reported earnings, but hey, who cares about Tesla apparently anymore? They're making more money with their Bitcoin investment than they do selling cars. I mean, it's unbelievable. This is why I'm not surprised that this is going down. Anyhow, then Tuesday, nothing. Super, super boring the first 2 days. Then we have the third day. Wednesday comes along. We have the Fed meeting, and it's a non-event. Powell says something. The market pops up. The market pops down, and then we're done. And then we thought, okay, maybe Biden starts moving the market, revealing his new multi-trillion-dollar plan. No. I mean, the markets open here, go lower, come back right up, and this is where we are at. So this week, it wasn't that easy for me to find good trades to actually sell puts on. So what I did is I looked for some earnings plays here. And you talked about pins earlier. So pins, I actually sold a put. I sold the 6250 put right on the day when they gapped down. So because I thought, you know what? They already gapped down, 9% went down. This is approximately 12% down. And I still have a 9% buffer. So this is an option that expires tomorrow. Let's just quickly see.
You sold that before or after the report?
After it was going down. Yeah, because this is going back. When do you have volatility? You don't have volatility when a stock is going up, right? I mean, when the market is going up, the VIX is down, and the same here. Implied volatility is down. But here, when the market, or when not the market crashes, but when the stock is massively going down, suddenly you have put premiums. And this, again, I'm selling puts. This is when put premiums were pretty good. So this is a 2-day trade. And for a 2-day trade, let's see, on pins, sold 16 at 25 cents. So, I mean, not the most exciting, but let's see, 16 times 25. So that's $400 on this one. Just want to write it down. And most probably they expire worthless today. We'll see. I mean, pre-market, they are right now sitting at 66.77. I believe that they're going down also because of Twitter. You said it, they're just super related. But as long as they stay above 62.50 today, I'm fine here. So another one that I saw is Teladoc. So Teladoc, super interesting. Also, just zoom in here a little bit. Yesterday, they reported earnings, and whatever they've said, I haven't even read the
Markus, can you bring the chart up?
Sorry.
Yeah.
I see it, yeah. Okay, cool. So Teladoc reported earnings really not good. So yesterday, they plummeted down 8%, and this is when finally all premiums are going up. So this is where I sold the 162.50, and this is a 1-day trade, basically. So let's see what I did there. This is super short trade. So I sold 6 for 60 cents. Okay, so I can even do that math. That's $360. So we add this to the 9,459. So we will see what they do today. Where are they pre-market? Let's just see. So pre-market, they are at 169.93. We'll see. Yesterday, the 170 level held pretty good. So this is a super short-term trade because you said it. I mean, right now, the markets are kind of scary and spooky. Another one that I did is AG, which is basically First Majestic Silver. It's mirroring the silver prices. And I was just looking at it, and I saw that the 15 strike, super solid here as support. So let's just see what I did there. So AG, I sold a few more. I sold 67 for 13 cents. Okay, let's just see. What is this? 67 times 13. So I got a little bit more premium there. So that's 871. Let's see where we stand. So it's not too exciting this week. If you take the 871, then the 360 from the TDOC, and then what was it? 400 from the pin. So this is for the week. I should be able to do the math in my head, and I can't for the life of me. Does anybody? Probably like always good at this is roughly
400 too.
Huh?
Looks like $1,600.
Like six. Okay, I like this. The roughly $1,600. So you see, this where for this week, my goal is per week to make somewhere around $4,000. But when there's nothing to trade, then there's nothing to trade. It is for me, for an option seller, super tricky to sell options in a market where there's absolutely no volatility. And then the other thing is, when I'm selling options, I do not like to sell ahead of earnings, because you said it, this is where people are getting caught, right? I mean, this is where you get caught really badly, whether it is Tesla or Apple. I mean, before earnings, volatility is always high, so it's very, very tempting to sell options. But then what happens? I mean, we had this week big tech reporting. Google reported, and yay, they are up. Microsoft said pretty much exactly the same thing. Hey, you know what? We blew it out of the water in the first quarter. We did really, really well. And look at this. Microsoft is selling off. So you never know how they will react to earnings. Even when they're reporting good earnings, the market can go down. And,
hey, Markus, can I ask you
Yeah.
about Apple? Because I know you were working that trade, and I know you needed a rally in it. And
Right.
I was thinking about you. I was cheering for you, and you got it. So were you able, because you talked about how it was moving against you, what you were looking for? How did you handle that scenario?
So Apple worked out really great. Apple worked out to be a $4,800 trade.
Okay, good.
So you're
that
all the way
worked
on
out.
it.
So I mean, as you can see, thus far, knock on wood, thus far, still everything in the green, but this freaking right. This is just,
So what? And this is the
horse right now.
concern.
And this is where we talked about it the last time. This is a short-term investment gone bad, and a short-term investment gone bad becomes a long-term investment. It's almost like the house that you're building, triple D, right? I mean, you can't do anything right now, so this will become a very long-term investment because you're building when all the building materials are up. So I'm working my way down here. So there's two approaches that I'm using to this. First of all, I got assigned at 2150, so that's not good. I'm selling premium. I'm buying more shares. So both of this. So I was able to bring my cost basis down to 1790, and I sold a bunch of premium. And here we see it. So I sold around $8,509 in premium, and I need to keep chipping away. So with this, my actually break even. So my break even is now another $1.20. So it is at 1670. I mean, this is still far away from the 1021, but that's almost like SPCE. You said it earlier. Until they start producing revenue, nothing's going to happen here. I'm just super. I got caught here with my pants down, and this is what it is. So this is where I need to wait until we see a pop to 16. And in the meantime, I will sell premium to keep working my break even down. So I hope that by the end of May, that my break even is probably closer to $14.50 and $15. And I hope that.
How are you selling? You're selling more puts?
Yeah, I'm selling puts. So right now, I like to sell puts at the 9 strike because if we look at this and just shorter term here. So it seems that right now, 9 is a pretty solid level. So I sold a few there. This week I wasn't able to sell it at the 9. So I would get assigned a few more. So what I did is originally I got 7,000 shares at 2150, and now I'm flying rescue missions. And so what I did earlier is that I sold puts, and this is when this support level was still holding. Which was at around 11. So I got 3,000 more at, can't remember exactly if it was 11 or 13. I would have to look it up. And so right now I'm selling another, Jesus, stop with the notifications. I sold another 30 options. So this would be another 3,000 shares at 9. So this would just bring my cost basis down if I'm getting assigned, which hasn't happened yet. So yeah, because I need to bring the cost basis down. If I'm selling more at 9, probably my cost basis goes to 15, and then I have the premium. This brings it down to 13. So at some point, I need a little pop. I mean, this is just my plan here. And I know that sometimes it sounds like I'm throwing good money after bad, but what do you want to do? You said it earlier. If you bought SPCE at 40, you can't sell it at 20. If I bought
I do. I'm and my style is just maybe a little different, but I take long losers all the time. Like I have losers every single day. It's just a matter of how you want to manage that risk and how you do your risk management. Obviously, the only thing concerning for me is that it does sound like you're throwing good money after bad money. And what would happen if the stock continued to leak? I mean, and I talked to you about this when it was at 14. I mean, that's what concerns me, is that just you get your exposure too high on one stock. What if that one stock doesn't come back?
Well, you see, it's a fair question. So this is why I wanted to show this here. Looking at these positions, let me just quickly see if I can bring up how much buying power this eats up. Yeah. So see, there's a $250,000 cash account. So I have $500,000 in buying power. My right position is just eating up like $21,000 of my buying power here.
Right.
So that is, for me, that is not bad at all. So it is a position that I have here. It is a position that right now, would I love not to have it? Yes. Would I love to get rid of it? Yes, but not at this price right now. This is where I'm not in a rush. It doesn't really take away the ability for me to trade, because I still have plenty of buying power that I can do whatever I want to do. I just have this one dead soldier sitting around here. We talked about it. It's the lazy boyfriend sitting on the couch watching Xbox.
I love your analogies.
All day instead of going out, getting a job, and earning some money.
I love Marcus's analogies.
All right, that's one way to do risk management. There's a million other ways. Markus Heitkoetter, it works for
I'm
you.
not saying that this is the best way. It is my way. Everybody has a different plan.
Exactly.
Right?
It works for you. It works for you. To learn more, see more videos from Markus, go to rockwelltrading.com/Benzinga. Markus, thanks so much for joining us. As always, have a good weekend.
All right. You too. See you next week.
Thanks, Markus.
All right. Just a programming note. No Jason Raznick today. He just texted me. He said he had something come up. So, unfortunate. But we had Jason on the show yesterday, dropping a bomb on us. So that's fine. That's enough, Jason, for 1 week. Okay. Is there any stock that had earnings that is up? I think Western Dig. It might be like the only one.
Western Dig.
Having a good morning.
Right. That is having a good day today.
Leaking.
Yeah. It's leaking, sure, but at least it's up. Everything else is pretty much down. Western Digital EPS came in well above the estimate, $1.02 versus a 68-cent estimate. Revenue 4.1 versus $3.97 billion. Q4, so their fiscal Q4 EPS guidance also well above the estimate. The Q4 sales guidance well above the estimate. So just a beat across the board for Western Dig. Make more chips, please.
Yeah, we need it.
We've made the easy money in Western Digital. I mean, I didn't, but whoever has been along.
You tried to talk me into it.
I was in it a couple of times in the 30s, and then and I actually was. I think I had it from 35 to like 45, and then I kept thinking, the 50 resistance, and obviously it's torn through that. But I mean, it's went from 30 to 73. It's been a good move for Western Digital. Is it going to eventually move to 100? Maybe it eventually gets back there. I mean, it's been, the chip kind of market that, a lot of chips have come back substantially here, and it's a nice quarter, but it is concerning, Joel, that it's now leaking as well. I mean, just nothing. We never really know how the earnings season is going until this week, because this is the big week where the big guns report. The banks, whatever. It's really those big mega cap stocks that are 30% of the overall market here, at least on the Qs. I mean, that's really what tells us. And so far, not that good. I mean, the earnings were fantastic, but the response to the earnings has been lackluster.
Microsoft.
Microsoft had a good report, and they hammered that. They continue to hit it. I'm long it. Apple, they obviously it blew it away. $90 billion buyback, said everything they needed to say. The stock's going down. Amazon's been leaking all the entire session. Google blew it away. It's held on okay, the only one maybe, but and Facebook was good too. Facebook was excellent as well, and they've held on too. But I just can't be chasing stocks when they're gapping up 10-15%, and I just don't. I don't know why. I'm just concerned that rotation keeps us up. But this response to these earnings has not been great. So I'm not buying Western Digital up $3, $4, or $5 on a good report here, because there's been too many stocks that had good reports and went down on them. So I'm not chasing Western Digital.
Speaking of chips, Tommy Verse asking about Neo. I mean, this sort of fits into that growth theme, but also they were like, hey, by the way, same story for us as everyone else. We can't make as many cars as we want because there are no chips to go around. That was the biggest takeaway from their report yesterday.
Neo looks to me like that chart that I was showing on the Qs back in 2000. You know, it looks like the bubble has burst in Neo. And now it's in consolidation. You have traders that are, trying to grind it higher and hoping, okay, yeah, we're stabilized and we're going to eventually start going higher. I believe Neo eventually takes out the lows of the move and eventually starts to retrace a lot of this move that we had back from 2000 when the stock went from $5 to $35. I mean, what do you want? I mean, the stock had an incredible move. This was $3 a year ago. It went to $65. It went up 2,000%. So you can look. It appears to be cheap at $37.41. It is not. It is not cheap. It is still up 1,000% from where it was 1 year ago. If it retraced half of this, there's still a lot of people. The people who bought it $5 are still laughing, even if this thing goes to 20. So I just think there's a lot of bag holders here now. I don't think the easy money is there. I don't think Neo's going to like $300 or $200 or $100. I don't think it's getting back to $60. I think the path of least resistance for a lot of these growth names is actually still lower. And, people are going to say, that, they're coming back, but
they never sold that many cars in the first place.
Well, what's the multiple on this thing? Where's the valuation? I don't know. Where does it make money? Does Neo even make money?
I don't know.
I doubt it.
But I'll tell you, this pattern here is, you had that major low, you had to rally, and then you gave it back, and then you had to rally off there, and you gave it back, and then you had yet another rally, and you're now giving it back. It just looks like many-headed shoulders off many-headed shoulders. Just. I don't know.
It's got a market cap still, Joel, of $62 billion.
Is that bigger than Ford?
Oh, yeah, way bigger than Ford. Way bigger than Ford.
Not like way bigger, but yeah, it's big.
I don't know.
They're not profitable.
Ford's market cap is $49 billion. So yeah, it's worth more than Ford. I mean,
not profitable.
It was a sexy story. We traded this stock. It was awesome. But it is just a storied stock with a ridiculous valuation. I don't think it ever grows into that valuation. I'm sorry.
You got to recognize when the story's over.
It's over. I think so. I think the EV story that we're going to have 1,000 EV makers and we're all going to have 10 EVs because that's what you needed to happen for all these EVs to go up. There's going to be some winners. We know Tesla's probably going to be the winner. That's why it's hard to be bearish the best one of the group. But all these other ones, even the Neo XPEV, I mean, there's a reason that XPEV is not participating in the recent rally. It hasn't participated at all. It's sitting near, it's not even that far off of the March lows. I mean, we have substantially climbed on the S&P, substantially climbed on the Qs, substantially climbed on a lot of stocks. Well, 10, 15, 20% of the indexes since the March lows. On the Qs we are. And then you got Neo that's sitting here and it's the same spot it was back in March. Or you have XPEV. These stocks are underperforming the overall market for a reason, and that's because their valuations are crazy. Valuation matters when the story goes ice cold. And that's the problem with all these stocks. I don't want to own any of these.
Let's do some. No, actually, before we do take our time, good question from KGR. Let's look at the imbalances real quick.
They're mostly to the south side. They're not that big. I do see Ford 595,000 shares to buy. The reason for that is Jim Cramer last night was giving it love on Mad Money, big time love. They're pretty small. General Electric 100,000. So they're small. They're so small it's hardly even influential here. They're small to the south side.
Let's do some ticker time. And
ticker time.
While we're doing that, drop us a like if you could. And then after that, we do have a quick announcement as far as afternoon programming today. But drop your tickers in the chat. Drop us a like while you're at it, and we will spend the next few minutes doing that. I wanted to cover MVIS real fast. I saw someone just mention it. Sure. This one, speaking of silliness, you could have tripled your money in a week and a half, and it's given almost all of it back here. This is just a stupid. They had earnings, but who cares? This is just stupid.
They have $500,000 in revenue, Joel. $500,000 in revenue. It had a market cap yesterday when it closed of $3.2 billion. What in the hell world are we in?
This is MVIS.
MVIS.
I'm getting it.
Microvision.
I know.
500,000, not 500 million in revenue, not 500 billion, obviously, in revenue. No, not 500 million in revenue. 500,000. That's like a small business. 500,000 in revenue. You know, like that's like, you know, like buddies, like you know, building, you know, business. It's like a restaurant. You know, a nice sized restaurant. 3.2 billion. What are you buying? I mean, maybe there's some growth potential here, but we got to give some perspective. This stock back in April was 20 cents. And if we go back further than that, I mean, this stock forever, you know, has just been hanging around the pennies. It gets Reddit, it gets hot Reddit names.
That was it.
And, you know, they're pumping it and it takes off. But did it ever make any sense? Like, does it make sense to, maybe the revenue growth's going to be there. I know we're talking, you know, this is going to be a growth company and it's going to eventually grow into that. But holy mackerel, we got to just have some perspective here.
$10.
Like, well, $10, that's their support. That's your support. It's giving it all back in 3 days.
2 for $1 stock split.
Bag holders all over the place in this now.
Mm-hmm.
It's hard to fathom the valuations that people pay for stuff. Because 99% of the traders out there aren't doing any homework. They're just going on flow. They're going on momentum. They're going on, okay, it's story, it's going. I mean, just got to be careful that you don't get stuck in these. You can trade anything. If you're making money trading this stuff, by all means, continue to do it. But if you're sticking MVIS, Microvision, your long-term investment account, your retirement account, saying, well, eventually it's going to grow into that valuation, it's got a lot of growing to do to get to be worth a $3 billion company in reality, you know, long-term, to justify a $3 billion valuation. Crazy, man.
All right,
crazy market.
Stickers from the chat. Someone asked about Jake asked about 3M. I don't even remember if we covered this 2 days ago. It had earnings. It's looking like it gapped down, but it's looking like it's filling that gap from there.
Oh, nice.
Yeah.
Oh, that's a nice rebound. Oh, yesterday that was. Well, let's see. That's 200. Where did it get to yesterday? That's a nice rebound. 99.41. The gap was 99.68. I call that a gap fill today. Just make sure this thing takes that out, gets back over 200, works into this bar. But nice pop, bailed people out on this one. But once again, this hasn't been like a super crazy performer. It's still way off its all-time high. So this one's probably, I don't know exactly, but it's probably relatively cheap, right? Compared to some of these, they actually sell tape and glue and things like that.
Well, that's it. I mean, we've turned into a value market. Christian Fromhert's just tweeting at me, you know, saying he agrees with the commentary, and Christian's bullish Dow Jones components. You know, he's looking at that. And if, you know, I don't want to just retweet everything he was just saying to me, but, you know, Christian's smart, and, you know, he's identifying too that he thinks growth is going to continue to underperform value. There's a main reason for that, is that the gap just got so wide. You got some value stocks that were trading with P's like 4 or 5, and then you got, you know, stuff that's trading 50 times sales. It's like, what? We're in 2 different worlds here. That gap has closed a little bit. But, you know, really, when you look at the perspective of value versus growth, we had 10 years of outperforming growth here, where value, who wants value? We don't need, you know, stocks that aren't growing. We want growth at any cost. Buy growth. I mean, so the gap between growth stocks and value stocks went from, you know, like back in maybe 2007, 2008, we came back a little bit to parity. Obviously, we had a lot of bankruptcies and we had a lot of stuff going through the financial crisis. But then growth just, the last decade has just continued to gap. A decade of growth outperforming value. We get these little blips up like this, and then it just continues to go. And it grew to like this back when we got to the beginning of this year, 2021. Well, you know what? 2021 has been the year of the value. And now the gap has went to like here. But there's a lot of room here still. And I think that's what Christian's trying to say too. There's a lot of room for value to still catch up. And if we decide that we want to be more than a 3-month value rally, some of these value names could continue for a long time. And that's the point I'm trying to make too. It's not to sell all your stocks and we're having impending doom. It's to be careful that you're not all in these growth names at ridiculous valuations, because this market actually does care to a certain extent about valuation. It's starting to care anyways. And some of these value names might have a long ways to go up still, and some of these growth names might have a long ways to go down still to try to fill that gap just a little bit. We got a value outperforming growth for next year, and we'd still have a gap. The gap is so bloody wide. So it's, you know, it's borderline craziness, the valuations we were paying for some of these growth names, and borderline craziness how low some of these value names were trading at. I mean, Cleveland Cliffs, it's trading at a P of 3, 4. I mean, and obviously it's come up substantially since then, but it's unbelievable, that the gap, how wide the gap got, and it hasn't filled much at all yet. So that value could continue to outperform.
God, I had something I wanted to add to that. Jeez, I just forgot what I was going to say. Oh yeah, it hasn't been. It's been more like by now like a 7 or 8 month value market, Dennis.
Sure, we could give it that, but the growth, it's not really though, Spencer, because we had this going on at the end of the year. Everything was going up. Yeah. So I'm talking about the difference between value and growth. Value names have been rallying for 6-7 months, but growth names were originally rallying with them too. So you still have that gap there. But now in the last couple months, you've seen growth come in and value still. So it's trying to close that gap a little bit. We just had everything rallying the first 3 months. So it's really in the last couple months where the gap, I'm talking about the difference between valuation between growth and value, is starting to close just a little bit. So I think it's only been a couple of months where you had everything just rallying, so the whole thing was moving up before. Rising tide lifting all ships. So I think it's stock selection here now, and I think you have to be buying growth if you're buying growth at a reasonable price, not at any cost.
Okay, let's do a couple more here. I want to get your thoughts on U.S. Steel. This one is interesting. This is not growth, and it's had a big run. It is down this morning on their earnings report. This chart, look, I don't know what to think of this. I want Joel's thoughts on U.S. Steel.
Clear support here. Just under 21. We haven't traded there yet. Actually, a little bit here at 21.60, but this is your area right here. The low 21, just below 21. So that's where you're looking for today. You want to see it come in there and hold and turn back up. This one has been a lot weaker than the Nucor and some of these other ones. For some reason, this has been the weak link of some of the oil stocks. So that's what I look for in X today.
And then I saw someone mention Disney. Disneyland is finally opening today, so I guess that's something. But we know Disney World's been open in Florida, but Disneyland in California is finally be opening today. I haven't looked at Disney along this one forever. I don't look at the chart very often, so don't know what it's doing. But just saw that headline this morning.
If we get past COVID, Disney's going to be over a $200 stock. If we have some hiccups, I think you got to be concerned. It's been driven by Disney Plus. Disney Plus is an awesome service, rightfully so, that they've given it. It's just what does Disney? What do the parks look like? They might look awesome. I kind of like the pullback on Disney. If you do believe we're getting by COVID, but the wild card is still COVID. We're not past it yet.
It's traded down $1.21, kind of matching rate. You got an area though that looks pretty good here. Look at the lows from the last 2 sessions. That's really what you need to see. 82.75, 82.82, another low at 83.25. So there's your area of support. If you're buying it here, you're risking $1.20 down to there. And then on the upside, wow, things are just kind of bunching up at, let's call it 185.63.5. 3 of your last 4 highs are right there, right in that area. So quiet, matching ranges, see if it can break out of the top or take out that 183 support.
All right, it is 9:05. Before I let you guys go, Joel.
Yes.
Do you want to talk about what we're doing later today?
We're gonna have some fun after the show. We're gonna do some Derby analysis. I got my article ready to go. I've done my homework, and I'm gonna try and explain the intricacies a little bit more. Give you something a little bit more to look at the race and see what happens. A 20-horse field. It's gonna be a stampede. And we're gonna do that, and we got a special treat for you. We got a little contest at the beginning, and we got some clips. And Spencer's he's a big sports guy too, so he's gonna help me out with it. We're gonna do that at 4 p.m. Eastern Standard Time.
And we also may or may not have a special guest. I'm not going to say who, but we're working on getting an A-list guest on for a call.
We're working on it.
Not going to say who. You'll have to tune in to find out if we were able to book it or if we weren't. But that'll be at 4 o'clock today. So excited for that. We got some people asking about the Derby talk. So normally Joel gives a 5-minute thing. We said, let's just go for like a longer thing today. So okay, that'll be at the close.
I got my Derby. Do you guys see my shirt today? I got my American Pharaoh shirt on. 2016.
Who's your pick?
No,
You got to tune in, man.
Tune in, dude.
4 o'clock.
Okay.
he's not going to give away the secret sauce now.
Yeah. I mean, come on, man.
I'll
Don't
tell
you
you
know
what.
anything about
All right.
I'll be there with my DraftKings open, my MGM bets open, and I will be definitely listening to get my
It's gonna be
research done
fun.
for this weekend.
You guys are going to see what Lisa has to put up through during an actual race.
Yeah. Yeah, I bet. Okay. Guys, this show, like all of our shows, is always available as a podcast on all the major podcast platforms, iTunes, Spotify, SoundCloud, et cetera. Please remember all the information from our show, from every show, is meant to be used as informational purposes, not for investing or trading advice. Please go ahead, if you haven't already, and give us a like on YouTube. We're not even at 500 yet. Oh, God. Bad day on the like front, everyone. Bad day on
Bad day.
the
Bad
like
day.
front. Only about 1/3 of live viewers have liked the show. That's not going to cut it here.
Maybe that's just the way it is. Maybe people just don't like us.
I think it's me.
Maybe.
They don't like me.
I think there's a good group that doesn't like you, that doesn't like me.
Yeah,
that's
and
true. That's true.
Everyone loves Spencer.
I wouldn't say that.
Yeah.
Like everybody
yeah.
loves Raymond. Everybody loves.
You know what?
Yes.
You know what? You should see some of the emails that Jason's gotten about not just the three of us, but everybody on the stream. People have a lot of opinions about everybody on the stream. I'll leave it at that. Maybe
I've seen some of those emails before.
you think we get some weird emails, man. Let me tell you.
Send me those puppies. Or do I get them and not look at them?
I don't know either.
No, you don't get them because they go straight to Jason. Yeah. Anyway, we got some strange emails.
We got scolded yesterday, so that's another day.
All right, I'm going.
Me too. Bye, Dennis. Bye. See everyone at 3:30. 4 o'clock Derby show. Go get them, Spencer.
For the Derby show. Thanks a lot, Joe. All right, here's what we're gonna do for the rest. I guess for the next hour or so. No David Green today. Unfortunately, he is doing his boot camp this week. We're going to have David Green, I believe, back on. Let me get that down there off the screen. We're going to have David Green back on Monday morning to do some live trading. If you like David this week, let me know in chat. And we're working on lining up more live traders because I think that's what you all wanted, right? Is more live trading, especially at the Open. And so we're working on that. And I've put out the call to action several times, and I'm going to do it again. If you know someone, yourself or someone else that is willing to live trade and stream at the same time, you think they could be a good fit, then drop us a line. Drop us a line, shows@benzinga.com. Here, put it up on the screen. Shows@benzinga.com. Drop us a line. I have had a few people reach out to me this week with some ideas. I appreciate that. I saw them. If anyone that you've seen on YouTube you think is good, let us know. We will reach out. But we are working on lining up more live traders because David can't do 5 days a week. So we're working on getting that other live traders for you. Plus, it's good to have more than one person just to get a diversity of ideas and strategies out there, right? So no David Green today. What we will do, though.
Did you call for a trader, Spencer?
Oh, is that you?
Whoa, Money Mitch is here, bro.
He's here. So here's the plan for today. Mitch and I are just gonna hang with you through the Open. Maybe do some.
I was gonna do it, Spencer, but I'm seeing the likes just not there, man.
That's what I said. It's been a bad day on the like front.
I need some likes to stay with you guys through the Open. I'll run through some gappers lists. Spencer can check some news catalysts. We'll check out some trading. I'll give you guys some technical analysis that I definitely can do. And we're going to check out some my watch list today. But we need these likes to start jumping up. So let's get these likes up at least to 800 so that we can stay on.
Okay. We got some. Sam says that he wants more Spencer. That's not going to happen. You get enough of me already.
More Spencer. More Spencer.
What time does Neil come on? Neil comes on at 1 o'clock. 1 o'clock Eastern time after the Power Hour. So here's the schedule for the day. I might as well do that now. We've got Mitch and I are just going to chill for a few minutes. Next show is at 11 o'clock. SPAX Attack. And
big interview. Big interview today, guys.
You have one lined up today, right? Shapeways?
Yeah. The brand new 3D manufacturing.
Wait, what's the ticker on that one?
It's GLEO. GLEO.
GLEO is the SPAC that is buying Shapeways. So, or merging with whatever you want to call that. So, okay, that'll be at 11:15. SPACs TAC 11 to noon. Power Hour, noon to 1. They also have an interview today with the CEO of Verb. Ticker is VERB. Verb. That'll be noon to 1. Get Technical with Neil Hamilton, 1 to 2. Options Explained. You want more options talk? We have a weekly options show with Robert Roy from 2 to 3. We've got Stock Trivia from 3 to 3:30. The At the Close show. There you go. The At the Close show, 3:30 to 4. Joel's Kentucky Derby, whatever, from 4 until, frankly, from 4 o'clock until whenever we decide to go. I imagine.
Yeah, you never know. It might go into happy hour and Money Mitch.
I imagine it'll go probably until 4:30. But to be frank, I don't know entirely what Joel has planned for that. So we're kind of we're going to play it by ear and see what happens. And then Money Mitch is wrapping up the week here. So that's the breakdown for the day. I'm seeing people saying, "Hey, we got to give Marcus an hour show." We can work on that. David Green is not back on today. Roman Clubber. I'm trying to catch up on chat and see what I missed. I'm sorry.
All right. Let's go ahead and let's start running through what I like to look at every day, guys. If you guys haven't checked out this article on Benzinga, definitely check it out, guys. I'm going to put it up here in our chat so that you guys can find this article. This is the article I look at every single morning, guys. Reason why I look at it, it gives me the why is it moving and why we look at this, because we get a nice short summary a lot of the times of why a stock is moving. And what I do from here is I'll take a look at some of these stocks and then go through them to see which one I want to go ahead and maybe trade for that day. So definitely check out this article, guys. This is our pre-market session article that tells you 22 stocks are moving in Friday's pre-market session and why they are moving.
Can I show you what I do? The first thing I do every day, and I've shown this before, is it's in Benzinga Pro. This is I have many tabs open, but this is the one that I'm in the most. This is my movers tab. I have a news feed on the right, and I have movers on the left, and I filter it by what's up and what's down. And this is literally the first thing that I look when I walk in. I turn my computer on. This is the first thing that I look at. Right, what is up, what is down. Like I know generally, especially during earnings season. Like okay, I know there was Amazon. I know there was Twitter yesterday. I know there was Neo. I know there was news, and a lot of times I know what the stock did after hours, but I have no idea what it did pre-market, right? So I come in and I see, okay, what is up the most, what is down the most in the pre-market session, and that gives me a clue like right away. Okay, I see Twitter is down. Well, I knew that from yesterday, but I see it's down again this morning, and from there, if I don't know that if a stock didn't have earnings or whatever, I don't know. So, for example, here's one, ARQT. I don't know that. ARQT. No idea what that stock is. Okay. Here we have an article just highlighting the fact that it's moving overnight. LAUR, right? Why is it up? Oh, look. They had some headlines out after the close yesterday. I missed it. This is one of those online education companies, right? Or like for-profit. What is this? For-profit college? That's what this is. For-profit college. And that's what I do. I look at the ticker, see it's up, see it's down, look why it's up, why it's down, and then I go from there. And that's the first thing that I do every single morning with my pro.
They're saying they want a day trading competition with Raz and Mitch. I'll tell you right now, guys, Raz is probably listening, but he'd get his ass kicked in a day trading competition with me. So I'm just going to put that out there. Also, if he wants to call me out, he could call me out, but I'm sure he's listening out there.
We have been playing with the idea. So like we have all this money in like our Google AdSense account.
Money.
I don't even know how much it is at the moment. I'm sure it's like, tens of thousands of dollars. What do we do with that? Do we like have someone trade that money? I think maybe we just should bring on someone to trade with all the money in Benzinga's Google AdSense account, and just they make what they earn, and if they lose it, that's also on them. I don't know. I don't know the legality of that. I'm sure we could do it, but thinking about that as well.
All right, guys. All right, let's go ahead and let's start running through some of the watch lists or something that we're looking at today. One of the things that I normally do is run through the gappers. I've already taken a look at some of the stocks that I wanted to take a look at for today. So I'm going to go really quickly through this watch list. If you guys have a ticker that you guys want us to take a look at, put it in the chat. This is what it's about, guys. We'll be a lot more engaging here.
Yes.
We can check out the stocks that you guys want us to take a look at. So if you have a stock that you want us to take a look at, let us know in the chat, and we'll take a look before the open here. We got about 13 minutes to the bell. Keep your eyes on that, Spencer, so that we can get this bell right. And let's take a look here at a little bit of a watch list. And so one of the things I'm using, of course, is Benzinga Pro to do this, guys. But let's go ahead and run through this. It looks like Blink just signed an agreement with General Motors. So that one's going to definitely probably be on radar, guys.
That one just popped on that one.
Exactly. You see, that's why you guys got to have Benzinga Pro. That little red line at the bottom alerted me. Hey, this is big news, guys. Check it out. Check it out. Then when you pull it up, look, Blink on the move, guys. We're going to add it to our watch list here, guys, for sure.
So, yeah, and that happened as I was just talking there, and I should have mentioned it. So the stock just moved a buck and a half. Actually, no, it moved $2 on that headline just there.
Yeah,
so,
look at this 1 minute chart here, guys. Big move there. We'll look for a little bit of a pullback. Let's see where we can finally find some support at, guys. So one thing I definitely point out is that we had a rip out also on the 28th, just a day prior to this. So you got to look to see if we can come back towards kind of these levels. What I would look to see hold is kind of closer towards this $38 whole dollar price point. Let's see if we get a pullback towards $38.25 in the open. That's kind of the look that I'd look for, a red to green move, what I always talk about. Red starting at the open, moving into green. That's called the red to green. A lot of people like to do these, and they call them the dip buys. But, it's really a red to green move, and you usually try to attack the prior support, and then try to get in for that ride back up there towards that 39.50.
Wait, hold on a second. Otavio Silva just asked, what is Benzinga Pro? Otavio, what is Benzinga Pro? Oh, man. Do I have something?
What is the Pro? What is the Pro?
It is Benzinga's real-time news and research platform. You can sign up for free with a free 2-week trial. Check it out. No obligations. pro.benzinga.com.
Spencer, you did a great job there, but I think, my man Michael Murray does a better one.
When you want to maximize your performance in the market, you need access to the highest quality tools and news available. Benzinga Pro stands out from all of the options you'll be presented with, and their instant access to market-moving news positions you to be prepared to take on the market in the best ways possible. Here's how it works. Benzinga Pro's news desk creates original news content that's available on your main news feed and gives you actionable information about companies you may want to invest in. This news desk information gives you the chance to beat the market, receive impactful news as it breaks, and jump on trending stocks before and as they rise. And beyond that, Benzinga Pro is packed with helpful features and unique insights that give you the best information possible. There's tools like the Live Audio Squawk, which streams every day with important news and timely updates, and the real-time news alerts that allow you to stay on top of every developing story you're keeping tabs on. Alerts and news will be sent straight to your inbox or delivered as live sound alerts. For those investors that want real-time, actionable, and breaking news about companies they may be looking to invest in, Benzinga Pro is the tool to use.
That was
right then and there.
That was better. That was definitely better.
Yeah, that's an explanation right there. I felt we had to play that one for you. If you didn't know what it was, I'm pretty sure you know what it is now, guys. And so definitely check it out, guys. YouTube 20, save that 20%, guys, if you want to check it out. Also, for that person that was brand new, you can get a 2-week trial. Check it out, guys. You don't even need a credit card. Hit it up right here underneath me, pro@benzinga.com. Hit it up, guys. Hit it up. Let's take a look at some other movers today. So one of the things I wanted to take a look at before we get towards kind of the open here. So on the top, I'm going to look at which ones are green right now, right? And so Nokia on my watch. It's been popping up, guys. This is a lower float kind of trade here. But look at the daily chart. It has a little gap underneath it, so we got to be careful if it just wants to come and fill that gap down. But, it popped up. And last time it popped, it made a big move up there towards that 980s. Of course, that was back in the kind of GME days. So keep your eyes on it today. NOK is on my watch, guys. Another one that I got on watch today is Goodyear. Goodyear's chart. I like this chart here. I'm going to show you guys what I'm looking at. So one of the things is this is kind of a look here, a daily look, and look how we kind of had this sideways action. Let's see if we can really start testing back up. So right now we're at 18. Let's go into the 1 minute chart here. Look at the pre-market look. And really what we want to see is this kind of take a dip. I would like to say take a dip underneath that whole $18 and then get that breakout towards the 1840s, 1850s. What I try to use, guys, is the VWAP. VWAP. I don't have it on here right now. Let me go ahead and add that. I'm going to pull a different platform when we get into the open here. But yeah, guys, I look at the VWAP. Right now we have it underneath, but it doesn't really move until the open. Watch how you see this kind of curl up here towards this 1795, 18s. I'll look for a big volume push above 1825s and then a pull back closer towards that 18 where you expect to see the VWAP and then look to get in there for a little ride up. Another one to take a look at, Manchester United. Manchester United is one that I'm going to take a look at.
This one gave all its gains from that Super League thing. That was
exactly. But one of the things to notice is that it is coming back. Look at the daily chart. Daily chart has it coming back, guys. And if we look at the 1 week chart, look at this 1 week chart, guys. A lot of sideways action between 1936 and 1610, kind of been in between this area for a long time. And now we're approaching kind of these resistance. Is it going to make a move back up there towards 1985s? Today, I'm going to be paying attention to it. It looks pretty strong right now. We're going to take a look at it into the open. Let's take a look at a 5 minute chart right now. As you can see, guys, we've had this kind of sideways action. It's trading right now at 1790. Let's see if we can get this above, get it through the 18s, and get a rip out on Man U. Another one to watch, guys, VSPR. VSPR is one that's been moving as of late. And one of the things I'd mention is, let me get my notes here. VSPR is definitely one to keep a watch out for, guys. This has been moving. It's on a lot of people's radars. I did see some kind of sales, but one of the things to mention, guys, is that they did release kind of these on Wednesday. Look at this right here, guys. So their partner that they're kind of getting the SPAC merger with, sales were up. And so this is what I'm trying to see is maybe are we seeing this kind of reaction just a little bit later? So right now, if you take a look at it, you definitely have been pushing on this one. I'll be looking for a pullback closer towards the 1140s and seeing this one just rips out at the open towards the 11, kind of this 12 rip out. But this one definitely moves fast, guys. Be careful with this one. This one's more of a healthcare stock. So just wanted to mention that. Definitely be careful.
Someone asked about Coinbase, COIN. Let's pull that chart up. But I would just so it's at 292 this morning right now. I would. This one's tough because there's not a lot of history to go off of because it's IPO'd like 2 weeks ago. But I would just say, from a psychological standpoint, 250. It doesn't actually mean anything. But that was the direct listing price, which is not the same as an IPO price, but it's the price that was like the company like essentially used as a guideline for the direct listing. So 250 is like, and that was a low bar. It obviously opened way above 250. It opened at like 3 something, right? Opened at 381. But from a psychological standpoint, you want to see it hold, like stay above 250, just because that was sort of like the company's own baseline valuation, right? It was 250 a share. So let's try to stay above that if we can.
All right, guys. So I'm drawing a downtrend here from the 1 hour chart. It had a couple pops when it opened on the 15th of April, trying to get above this level here, 345s, 350, failed to get above it. It hit the third time, and then it really started sinking. That's when we started getting the sink. Now we've only gotten one pop up. Wait for you to get multiple bottoms down here towards that 280. That's the only way I would look at this chart. It really doesn't stand out to me at all here. At least technically, it does not look good right now. All right, guys. Next chart I want to talk about is CAPR. Why do I want to talk about CAPR? Is because they just got a license agreement with Johns Hopkins University, guys. And so this one's really important. They just signed an exclusive worldwide licensing agreement with Johns Hopkins University to include exomes for their vaccine and therapeutics as a part of the company's exomes technology portfolio. And so pretty much what I always like for is for when you get these cheaper stocks to match up with a bigger name, like let's say right here, Johns Hopkins University, or sometimes you'll hear a smaller stock mentioned, let's say Apple or something like that. Those can really get a stock driving because it gets on investors' interest. And so today I'm going to be watching to see if this one can get a run. It pulled back yesterday. It had a massive rip out towards about 540. Now we've had multiple bottoms here closer towards this 430. Let's see if we can get a pullback and just rip through 450s. 450s is really going to be important for us. It's kind of that psychological level. So CAPR going into the open. I'll take a look at that one. Let's catch up with the chat. Any other ones to take a look at really quickly? I'm seeing a lot of tickers being mentioned. Just go ahead and call a couple of them out there for me.
Yeah, I got you. Well, we already looked at Twitter this morning. I don't know if Mitch has thoughts there. Unity, ticker U. That's an interesting one that we look at every so often. This was, again, growth story. I mean, all these growth charts, they look exactly the same, guys. I don't know what else there is to say about it. It IPO'd in September, right? Already at a bigger valuation than it had in the private markets, obviously. That's why you IPO in the first place. But it went from an open of 75 in September to 175 basically in December. So and that's already at a premium from the IPO price. What is the IPO price on you? I'm just curious. So this one, it was like, one of the most cliche growth stocks that there was, and it's obviously out of favor now. I don't know what to say about this specifically, but you have to trade this with the rest of growth, right? You have to trade this with the rest of, the Cathy stocks, ARKK, Tesla, all of them, right? Like Zoom, basically every growth stock that is well off its highs. Roku, put that in there, right? You trade them all together, and they're all out of favor. So I don't know about Unity long term. I just know short term. At least it's gone sideways, right? At least it stopped going down, which is something good you want to. That's a silver lining here. But trade this with the rest of growth. As long as growth is out of favor, then this will be out of favor.
All right, guys. A lot of people have been mentioning Pixie this morning, so I'm going to go really quickly. So with you, just be careful because it hasn't tried that IPO low. Majority of IPOs try that IPO low. If you take a look and the percentages will kind of show that to you, but that's what I'd be careful on Unity. Now, Pixie, guys, you guys, what I would draw is a trend line on the daily, guys. And so I draw this kind of trend line down here. And I want it to come back towards these levels, right? Because what we want to see is kind of a pushed out above this. Can it pull back and catch a bid here? There's the bell, guys. Let's go ahead and have some fun here towards the open. If you guys see a stock that's making a big move, please let me know, and I'll go ahead and pull it up here.
Shout it out if you can. There was a quick question just about my trading real fast and how active I am. I do three things, right? I do long-term buy and hold. I do I don't know if I call it swing. I guess I do some swing trading, and then I do some short-term stuff. I have two main portfolios that I have. I have a Fidelity one that I'm doing. I have some long-term stuff, and then some stuff that I'm constantly just rotating around. So I might buy, a stock or an ETF and sell it after a few months or whatever. I'm just rotating around a core in the Fidelity account. So it's active management, right? I'm not trading actively, but I'm actively managing my positions in that. In my Webull account, which is only $1,000, I make short-term trades there. I'll make a day trade, right, in that account, or a trade for a couple of minutes in that account. And I go through phases where I'm active and phases when I'm not. But I more so would call myself a long-term investor with some active management in my main Fidelity account. That's how I approach things. Okay, back to the market here. Let's see what's happening.
All right, guys. So what I'm going to do, guys, to have some fun, and Spencer, if you could do me a favor and just put a little disclaimer here at the bottom for us. Sure. So, one of the things is I already kind of have 2 day trades in my Webull account, so I kind of only got one more. But to have some fun with you guys, what I'm going to do is I'm going to pull up the Webull paper account here. So
paper
just to
account.
have some fun. But I got $1 million in that paper account. We could have some fun, at least get some trading in. But really, I'm not going to be trying to trade with massive size. I'm gonna try to keep it more into what you would normally see these day traders trade. I'll try to trade with maybe 1,000 shares or 500 shares max. That way you guys can see the trades. Right now, I'm looking at Nokia. Nokia, guys, right out the open, it just pushed up there. That's 476. That's my leading gapper there. But UA also on my watch, guys. Under Armour, that one's been sleepy. It could wake up today, so I got that one on watch also. There's a push there on NOK there, NOK. You got that disclaimer for me?
Yeah, right there.
Boom, boom.
It's in paper account. Don't do those trades.
All right, guys. So I can put it up and have some fun now with you guys. Let's have some fun. 100 shares. I can do 100 shares. So I used to do 100 shares live all the time, guys. If you guys don't know, I used to trade with Beginner Trading. So I give them a shout out, guys. I used to trade every single day on that channel. So let's take a look here and see what we got. Let's do with 100 shares, like you said, Billy. I'm cool with that. Right now, I'm going to be looking at NOK. So right now, I see a push up to 478. What I'm going to do is I'm going to be looking for this to pull back here towards this to the VWAP. VWAP, what it represents is the weighted volume weighted price average, guys. And so what this does is it pulls volume into account here. And so let's go ahead up and set up here for to buy 100 shares here. I'll do a limit order at right underneath the VWAP. What I usually do is, so 474 is where I'm going to be putting this order at. All right, guys. So place that simulated order. Let's see. Go ahead and get out. So now you guys will see on the right-hand side that working order here, working order.
And I just want to add, the point of this really is not for you all to, is obviously Mitch is in a paper account. It's not to make money. It's for you to just kind of see like why he
a strategy here, guys. So what I'm going to teach you guys is how I chase what's called the VWAP bounce strategy, guys. So VWAP bounce strategy, you want to see a big push right out the open and then a pullback towards the VWAP. What you're trying to do is use that opening support, let's say right underneath this kind of this 470, to go ahead and set your risk. That's what's very important, guys. It's always about a plan, because if you don't have a plan, then where you're going for. And what I always say is know what your plan is and keep the mathematical probabilities in your favor. What do I mean by mathematical probabilities, guys? So a lot of times when traders trade, they do something called profit to loss ratio. And so you want to calculate that your risk is about 1 on the scale for ratio and the 2 for the reward. So let's say if here we were going to get in at the VWAP, let's say 75 or 74. If we're risking down towards the support, that's about 4-cent risk. So we need at least a minimum of 8 cents on the upside. And so that's what you call a 2-to-1 look. I really like 3-to-1 looks, because what that gives you is the advantage of that you don't even need to be 50% accurate. You only need to be 33% accurate to break even if you follow the mathematical probabilities every time. And so this is the important thing too. If once you get off of your plan and you're not using that 2-to-1 look or 3-to-1 look, that's when you kill your mathematical probability. And so one of the things I always recommend is figure out your system. What works for you? Because you're not going to be right on every single trade. But one thing you can do is learn how to manage risk and learn how to manage also the reward side too. Because a lot of people understand really quickly, okay, so I cut it if it goes down to this level, but where am I taking profits also is very important, because that's going to keep you in that advantage in your math.
I'm just trying to see what's moving here. So
yeah, let me know if you guys see anything moving fast, guys.
GP just moved down 5% at the open. Green power. I mean, the whole trade out of favor.
Kyle, I think you're wrong there. I mean, I could go into it, but I'll show a chart in a little bit. But we'll get past that. But the key here is not necessarily that a 3-to-1 is perfect for everyone. The key is figure out what works for you in that profit to loss ratio to keep your mathematical advantage. All right, guys, I'm going to put this down chart. The key here too, guys, is that we got a kind of a pull back in the SPY. We want to see the SPY start ripping. A lot of the things what I use on the SPY is an hourly chart. And the reason I have the SPY at the bottom here, guys, is because I want to see how the overall market's moving. I know a lot of times these smaller stocks don't move with the overall market, but if I'm trading against the market, I have seen, at least in my statistics, that a lot of the times I'm going to be on the wrong side.
Ooh.
And so that's why I keep the overall market into play, at least into my vision, so that I know, hey, if we're going up on the SPY, maybe I can find an up play. If we're going down on the SPY, maybe I can find a down play.
Hey, Mitch, check out Peloton here. Good call out there, Rita Ford.
Thank you. You guys, it's up to you guys, really.
Ripped at the open.
I'm going to leave that trade in for Nokia. If we get filled, I'll let you guys know. All right, so Peloton, let's take a look here at the daily chart. I'm going to put it a little bit bigger so that we could see this chart a little bit. So what I would see here is that we are bouncing off of a support. Look at this 97.41 here, guys. It's perfectly right off of this wick here. And so now you're getting that bounce. The question is, how strong of a bounce are we getting? Let's go into the 1 minute. See, this looks like, to me, it just opened up and just quickly went up through the resistance. Let's see if it can pull back to the support or the VWAP. This is the VWAP, guys, this yellow line you're seeing. I'm going to look for a pullback towards 98.50s or 98.40s, and then use kind of this support, this 98.30s, as the kind of the risk to reward outlook here. So let's see if we can get this pullback here towards the VWAP, and then we'll look to see if we can get an entry.
All right, bit of a buy the dip happening in some of those earnings stocks that were down. Like Twitter was down, obviously to open lower, buy the dip at the open. Neo up at the open. Who else am I thinking of? U.S. Steel way up at the open. You can pull up that X chart. A lot of these stocks that were down overnight from earnings are now gapping up, not gapping up, but moving up at the open. Amazon, opposite direction, opened higher. Obviously, it's well off the highs of the pre-market, but it opened higher nonetheless. It is down now at the open. Interesting dynamic playing out.
All right, just trying to catch up with the chat here. I want to give some shout outs to everybody that's watching out there. So I'm going to do a really quick shout out here. If you're new to the show or you just found Benzinga for the first time, definitely say hello, because that's what it's really all about. So I want to give a shout out here. Shout out to Dylan, MD, Psychoactive, Where's the Thunder at, guys? Daniel, XI, Jason's in the house. Jason, get in. Where you at? Looks, I think he's in Cleveland or something.
Yeah, he's in Cleveland right now.
He's in Cleveland, Ohio. Guys, go find Jason and let him know that he needs to get on pre-market prep. All right, guys, so I want to give a shout out. Talking Bread, always here. Born to be Free. Isaiah, Kyle, what's up, guys? It's always good to see the loyal viewers. That's what it's all about here, guys. We're building a community, so definitely smash the like up, hit the subscribe. And if you want to see more from kind of these trading ideas, what I would recommend is definitely check out Power Hour, Money Mitch. Those are our big hype shows. Check them out, guys. You guys can find a lot of trade ideas on those shows.
Shout out Mitch. There we go.
You guys already know, guys. Look, we're trying to get filled here.
All right. What else is moving?
All right. I'm going to step up here and try to get filled here. Let's try to get a fill here on Nokia here at 76. All right, guys. So if we get in at 76, remember we said we were going to risk towards this kind of 70 look here. So that's going to be a 6 cent look. We're going to look for a pushback up that's past that 12 cents. All right, let me look at my list here. It looks like Sol's starting to get moving here, guys. Sol. So I'm going to take a look at Sol. X is doing great, but you see it actually did the VWAP bounce right out the open. It pushed up, pulled back, touched the VWAP, and then ripped back up. Now, one of the things that you're seeing is multiple pushes up. 1, 2, 3. I think we're either going to get a push up through this 2305 or we're going to get a pullback here towards the VWAP for US Steel. Looks like we just got in Nokia, guys. Looks like we just got a fill in Nokia there at 76, guys. So let's go ahead and pay attention here. If we need to get out of the trade, we will get out. But let me look here and let me change this to Nokia's one. I want to show you guys the level 2 here and what I look at, guys. So let me take a look here at the order book. So one of the things in the order book that you can see is that there's a big seller hiding at where? at 78. So that's 134,000 shares there. We want to see that share size just rip through, and we can get through the 480s. Let's see if we can get that move up back to the 480s. If not, we will stop out at that 470. All right, Spencer, one of the things you can do for me is let's use Benzinga Pro. Let's use the movers tool to find things that are moving. Go ahead and pull your pro from time to time and show them.
Very interesting buy they dip happening this morning. You can look at Gilead 2, which is up at the open, was down from earnings yesterday, up at the open. You can look at Skyworks, which is not really actually up at the open. But Gilead is a big one that's interesting, right? Stock just moved up buck at the open after opening down $3 here. So you are seeing a buy the dip, some buy the dip action this morning. I'm gonna pull up my my movers tool. This is just the last. I've got it set to the last 5 minutes of the session. So actually, I'm gonna change that to make it the last 15 minutes, and just so we can get a little bit of a longer time frame on that. I do filter out certain stocks. Just FYI, I do filter out low price stocks, so I'm not seeing anything below $5 if that's your bag. And you know what? For the sake of the stream, what the hell? We'll just make it. We'll make it everything. All right. NTP. I don't know that one. I have no idea what. Here, let me get rid of this and pull up the chart.
Bosch, we see you out there, man. We see you. Definitely smash the like.
Let me pull up a chart here. Okay. NTP. Jeez. All right. So there's a 1 minute. There's a 1 day chart. You can see that. That's just today. Okay. That's my top gainer. What else do I see here? A lot of China. Up fintech. TIGR is up.
Is oil having a good day? I feel like it's having a good day. Let me take a look. I might have to trade some leverage ETFs.
I mean, you had a couple. Look, it's important to note you had Exxon and you had Chevron report earnings this morning, this morning, right? So, and you can see it right there. Earnings out before the open in Exxon. Chevron, last I checked, was down. Yeah, it was down way more. Let's pull up like a 2 day chart so we can see a little more. So you can see Chevron was down way more than Exxon was in the pre-market this morning. But they are both trading lower. What else am I seeing here?
All right, guys. NOK now back down to 472s, closer to that stop out at 470s. I have my hand on the bid to get out, guys. I'll let you know if I do get out of this trade.
KOSS. Haven't seen that name for a while. Let's zoom. Wow. Okay. Is are meme stocks back on the menu today?
Ooh, I'm liking this Under Armour look, guys. I might get into Under Armour here.
That's interesting. Wow, that Under Armour chart's gotten away from me. Oh, that looks like a breakout. Holy crap.
Looking to stick with it right now. I want to see it pop up right here and create a third bottom right here at 2012. Come back up towards that VWAP look. We could get in like 2015, risk off of 2010s.
Yeah, that's a good point from Hertz Scrambler too. It's not just U.S. Steel. It's really all the steel stocks. It's Nucor. It's Cleveland,
there you go.
It's Cleveland Cliffs. It's Nucor. It's basically every steel stock that I've looked at is up this morning. Clyde has asked about skills a number of times. SKLZ. We can pull that up. Not seeing a ton of action this morning.
Yeah, not the biggest not the biggest push. Is Clove really moving?
Yeah.
No.
Well, Clever Leaves is. I don't know about Clove. Let's see. It's up 30 cents and something, I guess. Did Neo just turn green?
It's a tough market today, to tell you the truth, guys. We look at my heat map, guys. When I see this heat map red, a lot of the times that's when I'll be looking for other trades or inverse, maybe ETFs to go the opposite way.
Sean, this is Mitch's Webull account that he's paper trading with right now. Neo just turned. Neo just turned green. Based on the close. Right.
All right. I like this look here.
No, it didn't. It didn't quite get there yet. It's about to, though. Neo's about to turn green.
All right, guys. So I put out an order right now to try to get filled in UA here. UA. There we go. We just got filled. We're going to hold towards a 2010 stop out here.
Let me pull up. So it looks like Bitcoin stocks back in favor today. Whether you want to go to Mara, you want to go to Riot, you want to go to BT, all bid up here at the open. Something else worth paying attention to. Even Overstock.
Bitcoin move?
Yeah, we're seeing a lot of Bitcoin stocks up. Overstock, Mara, Riot, BT.
Maybe check out BTB. Yeah, BTBT. How's that doing?
Yeah, SOS. They're all up here this morning.
All right, guys.
Voyager.
Out of that Nokia trade. We're about to get out of that Nokia trade.
What else do I see? Let's see what chat's looking at. Yeah, all coins are moving. You're right. You're exactly right.
Altcoins.
No, he says all, like all coins.
All coins. All right, there you go.
Okay. How's Doge doing? Who cares, Christian Gallagher? How about that?
To Doge. Oof. Can you imagine day trading that one? It's like a hundredth of a penny.
Yeah. No thanks.
Yeah, that one's a little bit too crazy for me. I'll give a story. Let's do a little story time here. So one of the things I would say is, you guys want to hear the story of my biggest day trading loser?
Sure, go for it.
Let's see if they want to hear it. I don't know if they want to hear it.
I want to hear it though. So.
You want to hear it?
Yeah.
You want to hear it? All right. So this was actually day trading back when I was first starting out, guys. I don't want to mention the community but I was trading with a day trading chat. What I was trying to do, guys. 1 minute pullbacks, and so I was trading this halted stock that's very low float mover. I'll call it out. PSTI. How's that? I know that a lot of people have heard of that one before. Looks like we're doing good right now in Under Armour. I got in there, guys, at the 2014. We'll see if it gets back up to the highs, which is 2032. That's where I'll get my first sell, and then I'll look for it to extend out towards 2040s for my other sell. Right now, it's still not out of Nokia because it just quickly bounced off that support. Let's see if it holds that and comes back up here. But okay, so PSTI, like I was talking about, guys. So one of the things that you guys can get caught with a lot of the times is when you see that stacked up level 2 on the ask and you see a big size, right? And so one of the things that can happen is if you don't have a really fast execution platform, or you can control your order routing to, I can pick ARCA or I can pick NASDAQ, and I can pick the order that's actually on the level 2 versus going through an algorithm and then being a little bit slower to the move. And so when I was watching this, I was watching the stock pop through $4. And right now it looks like we're going to have to close this NOK. There you go. Let's close that out. Out of NOK, guys, out of NOK there. It went through my support there. I'm out of that. Let's go ahead and get out of that. Looks like it's still not closed there. I'm going to go ahead. There it goes. It closed there. We got a little bit of a loser, but looks like UA is doing great there. UA is looking great. So let's keep letting UA work there. But let me go back. So when a $4 pop out, right? I got that $4 pop out. A lot of times when you get that $4 pop out, you get a breakout towards some kind of little reach, like an extension. This one went to 425 in a matter of a millisecond, guys. And so when I went to hit the ask at $4 with 1,000 shares, instead of getting filled at 4, I got filled at 425. And this is a big difference, guys, because that's 25 cents with 1,000 shares. We're talking $250 difference right off the start. And so what the stock did was it broke through $4, it went to 425, and it immediately pulled back to 389. And so from that moment on, I was already down about $400. And at this moment is when you get what's called the deer and headlights look. And it happens to a lot of traders, guys. You get this deer and headlight look where you look at your P&L and you're like, oh, snap. What just happened? That's when you need to go ahead and become the trader that you can be and understand that I need to cut the loss, not try to fight the reaction to the moment right there. A lot of times you're going to have a reaction to your moment, and that moment is for you to actually take advantage and get out. It's a good thing if you get out of that trade, but a lot of times what happens is you get this deer in headlight look. Next thing you know, your hands get tied up and you watch the next ticker or next 2 ticks. Boom, I was back down to 375 really quickly, guys. $750.
All right, I think the silver lining there is you didn't blow out your account. That's the silver.
Yeah. I mean, I didn't blow up the account, but I mean, hey, $700 loss can teach you that, hey, maybe I need to be looking at how I get into these, because what happened there was that the next order up was to that 425, and if I would have been able to route my order correctly, I probably would have got the order in near that $4, but I was using a platform that goes through an algorithm. And a lot of times when you go through those algorithms, your order execution is going to be slow.
Yeah.
And you guys need to know this. It's an important thing to learn, you know?
That's true for most retail brokerages. You really have limited control. You get what you pay for. If you're using a platform like Robinhood or Webull, generally your order routing won't be ideal. I do want to show one quick thing here in Benzinga Pro. So I showed you guys the movers tool. We have another movers tool that is in beta right now. Okay, this is that tool. It's a scanner, is what it is. Okay, so I have it set. You can see it's updating constantly. I have it set. I've filtered out microcap stocks, and I have it sorted here by stocks that have changed the most in the last 5 minutes on a percentage basis, okay? And this is updating constantly, okay? So this is a new tool that's in beta. It's our scanner tool. If you have Pro, check it out. Give us some feedback. But this is a newer tool that I'm not as used to using because obviously it's new. But I'm going to keep it up here on my screen and keep this open as we're on this stream here, and just sort of watch it and see what's up, what's down, and use that to guide me and look at charts as well as the chat. So check it out if you haven't already. This is our brand new scanners tool. It's got way more functionality than the movers tool does, but it is in beta. So check it out. Give us some feedback if you haven't already. We're always adding new tools to the platform, and I'm going to have this up on my screen here for the duration of the stream. So yeah.
All right. So now we're getting this kind of cup and handle look here for Under Armour. I'm liking the approach. I want to see it pull back maybe a little bit to 2020s, but from that point, really rip out for us, guys. Let me see if I have a drawing tool.
So, and then wait, Solar is asking how it's different than the movers tool. It refreshes more quickly. It's got more filters, and that's basically it. It refreshes quicker, and it's got way more filters. You can customize it way more. You can sort. You can add like a whole bunch of stuff, right, on the columns. You can sort by those columns. You can add more filters. It's way more customizable than the movers tool. So
missing overstock with a
no. I said the Bitcoin stocks.
It was on my radar. Genius up about 0.9% from my radar this morning. Overstock, CAPR up 2.42%. That one's one to keep an eye out. Another one up today that I wanted to keep an eye out just because it has a solid daily support is Macy's. Macy's is one to definitely keep an eye out on. Let's see how those react.
All right. Well, Gilead finally stopped going up, which is interesting.
All right, so I want to draw kind of this look here that I'm seeing in. So one of the things is with Benzinga Pro, you actually got this drawing tool. I had to go to Benzinga Pro to use this. Looks like Webull doesn't have this. So one of the things that you'd see, guys, if you see kind of this loop approach and then kind of a whip, that's that cup and handle. Let me draw a thicker line here so you guys can draw it and see it here. So let me use a different color here so you guys can actually see the look. And so that's what I'd see right here, guys. So a move up, a pullback off the VWAP. That's where we got in, guys, right here off that 2014. And now that you have this kind of cup look, let's see if we get the handle breakout. And so you usually get a little pullback and then a push back up towards the resistance breakout. And so we want to see it get back up towards this line where we'll take that first profit look, that 2030, and then we'll look for it to break back out through that 2030s up to the 2040s. So let's see if we get this breakout in Under Armour. Right now, let's see how much we're up on that paper account. Let me go ahead up and pull this up here. Looks like we're up $9 on the 100 shares there. Let's see if we can get this move back up there towards the 2030s and the 2050s there. Only using the 100 shares so that you guys can see exactly kind of the gains and losses. When you use 100 shares, it's really easy to calculate everything. And so that also helps there.
Someone asked Alex M. thoughts on shorting the all-time high. Wait, is ATH? Do you mean all-time high? Or do you mean the stock ATH? That's what I don't know.
Yeah, I'm wondering. I can tell you right now that's a lot of the times when you hear people shorting highs, if it's definitely a stock that's moving fast, that a lot of times that's going to be recipe for disaster. Reason why, guys, is a lot of times you're going to get those short squeezes. We've been hearing a lot about them, right? And those short squeezes, a lot of times when you get squeezed that hard, you can't get out on the upside. You have to put your order like 5 cents, 6 cents above the ask just to get out on the trade. And so, or put your cents, if you were short, you'd put it 6 cents below the bid just to try to maybe get out sometimes. And so this is where you can definitely run into some problems here. I'll tell you guys, I never liked shorting highs. If I did short, I would short breakdowns with bad catalyst, and I would short off the VWAP the same way I look at the VWAP bounce trade, guys, but I look for what's called the VWAP fade. If you want to look up that strategy, you'll find a lot of videos on YouTube about it. That's the VWAP fade look.
Okay, actually, it doesn't matter because ATH is at an all-time high, I think. I would never, just rule of thumb for me, and this comes from listening to Joel and Dennis for years. I don't bet against stocks at all-time highs. Never. First off, I don't short stocks outright. I would much rather do it via options. But second thing is, I would never bet against the stock at all-time highs. It just why? So you can be the hero and call it top? No thanks. No thanks.
You know how it is. There's always the hero play. I call it. There's always a hero out there, guys. I'll tell you right now, the hero gets burned all the time, guys. And they might show up in Twitter one day, but they won't show up the next.
I mean, it might work for you, great. But I've tried being the hero too, and it.
Ribs, you're getting mad because I'm showing you what a cup and handle looks like. Come on. There's a lot of people out there still trying to learn the trading game. And so a lot of times that's learning patterns first. Maybe you know what a cup and handle is, but maybe someone doesn't.
What else am I seeing here?
All right, so I'm seeing BTX starting to show up. Let me take a look at this chart here. There you go. That's a mover right there, guys. BTX, guys. This is a biotech on the move there, guys. I'm trying to look to see if we can get an entry, but this doesn't look like a setup that I could get in now. It's already ripping up there. That's BTX, guys. Brooklyn Immunotherapeutics. Is there any news on that one, Spencer? I know that a lot of traders were watching this one, and I think even some. I won't mention his name. It might go with Warrior, but
well, he's got influence. So
he trades this one. Let me just put that out there. So this could be a chat room pump kind of stock.
I didn't see news this morning. There was news yesterday morning about it, but I didn't see any news this morning on BTX.
There you go. Look, BTX is a lot of. It's a pump and dump. Someone said in the chat. It very much could be. It's just be careful out there, guys.
That's why I avoid low price stocks for that very well. That's not a low price stock really, but okay.
Yeah, mid caps are some of my favorites to trade, guys. But a lot of times you got to understand the float, right? Spencer, maybe we should talk a little bit about what a short float looks like compared to a stock that has a huge float and how the price difference it makes a big difference.
Yeah, I mean it's subjective, right? Obviously stocks that have lower floats are easier to push around. My general thing is like any stock that's got a float of less than 100 million shares to me is like a low float stock, which just means it's easier to manipulate. There's not a ton of supply out there. That's my definition. So other people may have different definitions of what qualifies a low float stock, but to me, under 100 million shares is a low float. And it just means that they're easier to push around, and it means that stocks you see stocks with like 8-9 million share floats, and it's like, all right, this one is not trading off of anything. It's just trading because someone is pushing it around. And I don't want to fight that person.
No. That's how you get caught. So right now, Sol did a nice kind of VWAP bounce look, guys. If you look at this chart, you would see kind of that push up, pull back towards that line, off the support. You can risk off of and let it try to come back towards the resistance. This one's now up there to $10. One to keep a watch on it. Maybe Solar is starting to get a little bit of a move back. I was talking about it on Money Mitch earlier. I got caught on this one a little while back, but I also saved myself by getting out.
All right, interesting that you want to look at EDR real fast. That was the IPO from
Let's take a look.
Endeavor. So it fell below its IPO price on the opening day, which you never want to see. It is above that price. The IPO price was $24, so we're at $25.48. So we are a smidge above that IPO price still. But you see headlines like, "Oh, Endeavor pops on IPO." Well, yeah, it popped in like the first 5 minutes, but that's pretty much it, right?
All right. So let's teach you guys one of my favorite.
Most traders did not make money on Endeavor yesterday. They didn't.
I mean, if you did, you had to be quick about it. Let's just say that much.
Billy James, where do you see the float? It's in Benzinga Pro. It is also should be on. To be frank, should be on your brokerage platform. If they don't have that, then they're screwing up. But it's a piece of information about the stock that should be available wherever you trade. But again, it's also in Benzinga Pro. It's in the details widget. In the details widget of Benzinga Pro, we have float, average daily volume, other information about the stock. Float, I should add, is different than shares outstanding. Float is just the number of shares available for trade. Shares outstanding is the number of shares that exist for a company, including shares that are locked up.
All right, guys, I'm going to show you guys what I call the rule of three, guys. This is a rule I came up with to help me out understand kind of bull flags and bull pennants here, guys. So let me see if I could get these numbers to be a little bit bigger here. All right, no, well, it's giving me a little bit of a battle. I'll zoom in here. So really what it's all about is there's usually 3 pushes to resistance, 3 pulls to support, and then a pattern will attempt to break out or break down. And so here you got a push up on EDR, then a pull back kind of towards this $25, then a push up towards $26, and then a pull back, right? Then you got your third push up here towards $25.75. The biggest thing now is that you want to see it hold this third support touch, which is near this $25.50, $25.40 mark. Let's see if it holds that and attempts to go back through that $25.70s, which would be a 4th attempt through the resistance. And that's usually when I see the breakout happen, guys. This is the rule of 3. And if you look up in Japanese, the rule of 3 and the number 3 means it's a lucky number kind of thing. And for some reason, this is a pattern that I see common. And you guys let me know in the comments after, maybe if you guys have seen this pattern before, but this is something I call the rule of 3. 3 resistance touch, 3 supports touch, look for the breakout.
I'm looking for weakness today in the smaller boutique financial firms. A few of them had earnings, like JMP, right? JMP Securities is down today. Looking at Piper Sandler, PIPR is down today, but it looks like it's up from the open. I'm looking at, who else am I looking at? JMP, Piper. There's a few other ones. What about B Riley? RILY. Jesus. Down 0.5% today. What about Cowen? COWN. All right, that one's actually up. So not flying. But I'm keeping an eye on these boutique financials. A few event earnings last night. Oppenheimer is actually up today. They had earnings, but I'm keeping an eye on all. And I've got just to give you guys an idea. I saw JMP. So here's what I did. I was in my beta, my scanner tool. I saw JMP right at the top. Biggest change in the last 5 minutes. I was like, all right, I know JMP. I know there are others, but I don't know. I don't know like those tickers off the top of my head. So I went to my details widget. I went to my peers tab, and I'm seeing all these stocks that are related to JMP in the same industry as them. So that's how I found all these related names. And I do this a lot, by the way. Even if it's like an obvious one, like steel, right? Like I can name 3 stocks off the top of my head, 3 steel stocks, but I can't name like 20. Here I have like 20, right? Vale, Nucor, Steel Dynamics, Allegheny, all the steel stocks right here, all in the details widget, all in the peers tab. It's all about relationships, and so I use this feature a lot in Benzinga Pro, just so everyone knows how I use this stuff. Clyde W, a free and Tilray. Is that merger done yet? I honestly don't even know. I'm over it. Clyde is they're going to announce it Monday, today or Monday. Cool. I'm sure it'll go through. I can't imagine there.
Big spike in the VIX today. 9:30. It really was up there. Let's see if it starts pumping again. That shows downside in the SPY. We're starting to get a lift here in UA. Let's see if we can finally get towards our profit here. We set profit above 2030s. We're at 2025 here, starting to push up. Let's see if we can get towards that 2030 and take profits.
Oh, the pool trade's coming off today. LESL, Leslie's, down 3%. What about
All
Swim?
right.
What about Swim? Down 3%. What about Pool? Pool's up relative. But
EDR is starting to look good, man.
I see Leslie's right there. LESL. Pool trade's coming off. Swim trade's coming off today. For now, at least.
All right, guys. So a lot of people were talking about that they kind of use that. I heard Billy James talking about kind of my approach here. To tell you the truth, guys, I feel like this is such gold. Sometimes I don't even like to show people this because look at this. This was a 5-minute look on that EDR. Look, push up, pull back, push up, pull back, push up, pull back, rip out. You guys look for it and tell me if you guys see it, because I looked at so many charts and I saw this, and when it stood out to me, it was like liquid gold. And it was, if I've ever had an aha moment in trading, it was when I found out this pattern.
Guys, if you haven't already, by the way, if you want more of this, smash the like.
Smash the like. Let us know in the comments below what you want to see more of.
Yeah, tell us in the leave a comment. We're trying to engage more in the comments, so leave a comment if this is your thing, or if it's not your thing. That works too. Whatever. We can take it.
Never get greedy. Never get greedy. Always know you're out. I should have bought that EDR, but we're starting to get that push. Let's see if we get that push for real.
Oh,
you see? You see the pattern, guys?
See, I love this right there. Solar up. Never even noticed the peers tab in the details widget. Never even noticed that tab. We got all these tabs there, right? Overview, news, calendar, chart, financials, which is obviously the financial statements, peers, key data, all in the details widget, all right there in Benzinga Pro. Is this recorded? Yes, it is recorded. You can also just rewind it because we're on YouTube.
Oof, that EDR, it broke out, man. Look at that. That's a push. Kind of a stock we should have maybe tried to take a trade on, but well, I wanted to explain the pattern more than the trade there. So let's see if we get this to keep going out.
Interesting. The gambling stocks are all up today, at least from the open, not from the close.
Nice. It's actually the ones I was talking about last night on Money Mitch, guys. Pen up, DKNG. One that I was looking at today, guys, was RSI. RSI I called out yesterday as being my favorite sports betting play here. Let's see if this one can really start moving again. Another one that was up today, I'm not sure if it's up now, but GNOG. That's another one to take a look at. That's Golden Nugget.
I always forget about that one. Because that was a SPAC. That was LCA. I always forget about GNOG.
Can't forget it. One of the things is they do got some I think they got upgrades recently, GNOG and RSI. So one of the things to state though is with kind of this GNOG, it does have that multiple bottom look. Let's see if it really starts ripping through 15s today. All right, guys. It looks like it's a pretty red day in the market. I mean, when you look at the heat map, look at this heat map, guys. That does not look good, Spencer. What do you think?
Yeah, that's not ideal.
Not ideal, right? Not ideal. Usually, this is not the, let's just say the best day to be pushing longs. When I see days like this, guys, this is when I usually, if I was a long only trader, those are days that I usually go and I say, hey, well, guess what, guys? It's Friday. Time to go to the mountains, take a hike, enjoy it, hit the mountains, clear my head, and come back when the opportunities are present. This is so important as a day trader. Sometimes the best trade is no trade.
The trade you didn't make. Yeah, that's it.
It's so important because you got to know when your strategies are going to work and when they're not. Best way to know this, and I don't know if you've ever done this, Spencer, but definitely journal your trades, journal your thinking, not just on when you buy and sell, but what was your plan and thinking through the trade? Did I get emotional and sell early? Did I go ahead and not take my reward when it got up to that level? That's how you really start learning your personality as a trader and develop your skills. That's what I would tell you guys. You have to learn your personality towards your strategy. See if those two go hand in hand, and then you'll start seeing the results that you kind of need in day trading. It's a tough business, tough business, I'll definitely say. But one of the things you need to do is keep a lot of data and know when the strategies kind of change. You have to learn to adapt. You can't just always stick on one strategy for the rest of your life. You always have to know that the numbers can change. And that's what happens a lot of times in day trading. A strategy works for, let's say, 2 or 3 months, and then it'll have like 1 month where it'll give all that gains back if you don't pay attention and adapt.
Yeah, I mean, look, if you listen to our shows, Dennis talked about that. Dennis has had to change his strategy like several times over the years. That's why, frankly, it's the reason he has so many strategies is because he's had to evolve, right? Over time.
The playbook.
Right. He's had to change his playbook over the years, and that's normal. That's normal. So, all right, Mitch, it is 10:15, just about there. Do we want to wrap up this stream? I want to give you time to prep for SPAC's attack at 11.
All right, we're going to go ahead up and wrap up in a second here. Let me just go ahead up and see how this UA trade is going. It's pretty much the only trade that we've been going well for us today. We had a $6 stop out, so let's see if we can end the day in the green, man. I'm going to see if UA can make a move right here. If it doesn't make a move to rip back up through this, we'll go ahead and just kind of wrap up the day here. But like always, guys, one of the things that I want to mention is if you guys want to see a specific kind of show on Benzinga, let us know in the comments, guys, because one of the things that we want to do is do shows based on our viewers, because at the end of the day, this is not for Spencer and I. As you guys can see, I could clearly do this every single day if I wanted. But at the end of the day, one of the things that we want to do is get what you guys want out there. So if you guys want to see some more live trading, if you guys want to see maybe some options, if you guys want to see, hey, can we just do kind of have someone available to go through technicals all day with me? Hey, maybe that's what you want. Let us know, guys. That's what we want to hear. We want to hear your feedback, and we take it very seriously because at the end of the day, it's the only way we can get better.
Real fast, pull up that Snapchat chart. Snapchat's looking juicy.
Snap.
Looking juicy today.
Snap.
Looking juicy.
Whew. Look what it did, Spencer. Push up, pull back where? Right above VWAP. There's a reason why I use this line. There's a reason why this is the only indicator that I try to use now. It's because you can approach trades like that. When you see those breakouts, those pullback to it, you get a risk or reward.
Yeah, Kenny Glick talks about this all the time. It's the only one he uses as well. It's the VWAP.
And you know what Kenny does? I'll give him a shout out. So Kenny does a little bit different. He does what's kind of the revision back to the mean a lot of the times.
Yeah.
So like, let's say on this breakout, he would say that it's coming back to the VWAP. It's going to come back to the VWAP sooner or later. And so like you could then approach that as a lot of times he does these on the downside more. But let's say if this was on the upside, let's say short up there and knowing that I think it's going to head towards that VWAP. And so that's another way of looking at it. Some people do it the opposite way. They're looking for it to come back to VWAP. And so they trade it to that spot and then they get out right there.
Do we have a VWAP scanner alert? No, but you can have the indicator up on your charts in Pro. Okay. I think that's a good place to wrap it up, Mitch, guys.
Yeah, let's go ahead and wrap it up here, guys. It looks like UA is just going to stick around, hang out there. Doesn't look like we're going to get our breakout right now. I'll go ahead and I'll definitely put out a chart of this a little bit later in the day to kind of call out the trade if I got stopped out or it kept going to the reward. So that way we didn't leave you guys hanging there. But like always, guys, definitely smash the like button. And so up next, we got a couple of great shows for the day planned. Spencer, do you want to go ahead up and pull up our schedule again before we get on out?
We got it up. Oh, no, it's not in the brand. I'll have to go to Twitter. Go to twitter.com.
To the tweet.
There's our calendar for Friday, the 30th, the last day of – I can't believe it's May already. Jesus, where did the time go?
It does go by fast. It goes by fast.
For the day. Okay, as I mentioned, SPAC's Attack coming up next. We've got the Power Hour, which really is 1 hour. At 1, Get Technical with Neil Hamilton. Power Hour at noon. Get Technical at 1. Options Explained with Robert Roy at 2. We got Trivia 3 to 3:30. The At the Close Show 3:30 to 4. And then the random Kentucky Derby special at 4, followed by Money Mitch at 6. That's the plan. Stay with us. Smash the like. Leave us a comment. And we'll see you guys later on.
Yeah, guys, check out Money Mitch tonight. We're going to be doing a little bit of a fun time. Happy hour. I mean, it's going to be fun since 4 o'clock. Talking the Derby. Then we'll go into a little bit of a happy hour. I'm going to have some traders on with me talking some stock picks. So if you guys want to come on the show, reach out to me. Mitch at Benzinga.com.
Cool. All right. See you guys.